Dev Bashar, Dev Tushar. Good morning. Okay, let's have a look. Good morning. All right. I'm gonna do things slightly differently from now on. So I don't know how it happened, but yesterday I somehow missed TRVL in my analysis, and I was very disappointed in myself yesterday because Dan, sorry Dan commented and asked him, did I tilt? I was going to, and then somehow I got distracted. So I don't think I did. Sorry, Dan. I apologize. Error. Big error. So what I really need to do is create a format because some people have been asking for shorter updates as well. So I think I get a lot of people come on and request, and I get distracted, and that's part of the problem. My main focus is TRVL. Actually, my whole focus is TRVL, to be honest with you. It's the only one I've got spot on. So everything I do is for fun, really, and just kind of, I don't really see many people doing altcoins that much, and so I'm just trying to kind of create a niche, I guess. But really, my focus is TRVL, and just that's because of my background. So anyway, it's not going to happen again. If it does, then it could. Just keep on prodding me, but I think that was my one and only time that I missed it. So I'm just going to start with TRVL, I think. Should I start with Bitcoin? It's hard because you have to start with Bitcoin because it sets the context for the whole market. That's the thing. And actually, you know what I want to do? I've been thinking about this. Good morning, Gary. Sorry. Oh, Gary, what the hell? I'm sleeping. Good morning, Craig. I'm losing my eyesight. I'm forgetting things. It's terrible. I almost think I need to do Bitcoin first. But I don't want to. I want to really do some depth stuff. I don't want to get distracted. So one mistake is that I trade and I analyze and I get distracted. All right. You know what I'm going to do? Just for shits and giggles, I'm going to delete all my charts again. When are we in? May? It's June now, isn't it? I can do it. So I don't like to actually delete stuff because you never know. I like to maybe go back historically. So that's why I kind of labeled them like that. Make a copy. Call it June. Okay. June, perfect. I may regret this, but there. Clear that. Let's get rid of the volume as well. Actually, let me do it on all of my charts. Oh gosh, I'm looking at Davos stuff. Let me go back to my iPad. Oh, it doesn't matter. There it is. Yeah. Okay. Let me do it for all of them actually, because I've been in this kind of mode. This mode. I just want to redo it all. I'll just do it on those two first, and then see how we get to. All right. Okay, so looking at TRVL, I've just deleted all my drawings again, and I like to do that. I want a fresh look. That's kind of why. I'll quickly go through the basics. I won't spend too much time explaining. If you haven't seen me do this before, then you can. I've done previous analysis when I explain certain things. I'm not going to explain now. I'm just going to mark off stuff quickly. Monthly levels, 1, 2, 3. Weekly levels. Okay, that's why we're getting a reaction there. That makes sense. I was wondering, but now I know. That's cleared, cleared. Tapped. There is one there. The reason why you mark it is because it's been tested perfectly, so that's a perfect reaction, so that's obviously relevant. One is up there. I'll mark them all off, and then you've got the numbers, so if you want to update your charts, you can do that. I'm just going to put every level in now and just have full updated information. Give me a second. Daily levels. Just mark them all out. I'm using buy bit chart. It's probably less accurate at the beginning, but obviously it's the most accurate one now. Mine. So its historic levels might be a little bit off, but probably not. Okay, cleared. Clear that all of that liquidity is cleared. And come into this current range. I think by now people realize how important these liquidity levels are. I think it's become quite evident, hasn't it? So that's to the upside and to the downside as well. There's still quite a lot of liquidity on the lower to the downside. So did it tap? Just missed it. just marking out the ones which haven't been traded through. So they should, because they haven't been traded through, they should react. There should be some kind of reaction. Very, very high. Very, very low. Under control. So okay, so look at this. Good, David. Morning, David. I'm just doing a full. I've just deleted all my TRVL drawings. I'm just doing a full analysis while I'm having breakfast at the same time. So so ignore the munching. Okay. We mark the all-time high. Time low. Specifically stuff in. All-time high, all-time low, and do a full fib from. You do it from top to bottom, bottom to top. People always get confused. Well, fibs are retracements, so you do it from the beginning point to the end, and you're working out the retracement, unless you're calculating the extension. Extension you do the other way. So retracement, effectively with a retracement, you're trying to calculate the areas of resistance if the price goes down, the areas of resistance as the price comes back up. That's the retracement. So that's what you're doing, your starting point to the end point, and then you're trying to calculate the retracement. So in this context, you see I have the wrong one. So you have the extension. So, and I'm using the log chart, so that would be the retracement. These are the retracement levels. And then I like to do it. I mean, don't really need to do it exactly to the dollar, but to the cent or to the penny. But I like to do it so I get accurate numbers, and so therefore you need to have the numbers, the correct numbers, because they're just ratios, and to be fair, they're just areas as well. They're not exact numbers, but I'm a little bit OCD about having the correct numbers, so I'll just do it. All right, let's just have a quick look of that. with all of my levels in and my fib retracement. What did that? Let me just put it in a folder so it's a bit messy as well. Okay, so that's kind of your liquidity map, so to speak. And so you can see that the white line, the horizontal lines are all areas where the price will find support and resistance. You see some gaps in the higher parts, right? That's pretty obvious. This is the area where we have to get through. We've got gaps. We've got gaps in this down move too, above 5.5. There's basically a gap all the way up to 6.7, and then it's higher up 7.2. And then if you get past that, you're gapping up all the way up to 9 cents thereabouts. Got a lot of gaps on the way up. See that? So whatever happens, when we do eventually move up it again, it's going to be quite quick in these gaps. It's relatively low volume, and as you can see, we're coming into a very kind of high volumes, high interest areas where there's lots of liquidity, and it all coming all the way down to this value area low. You can see that we're at the weekly level now. We've had a little bit of a reaction. You can see that there's a bit of a reaction, so we know that that's a support level. We're back into it. Someone had a market buy. Obviously I keep on saying don't do that, but it doesn't matter, it's life. Let's see what happens here. The problem with TRVL is quite illiquid, and you know, one small market sell you make a lower low. But if this was Bitcoin, you know, this is coming back for the test of the bottom of this expanding candle. If that holds, that's your range effectively. You have to see if the buying continues, but effectively at the moment the current price range is there between this weekly and daily level. That's what I'm looking at in the price chart. I mean, it looks quite hard. It's hard to buy that, isn't it? It's hard to buy the price when it's falling so sharply. You see the volume actually is a little bit higher up, and then there's obviously a little bit of volume down here at the lows. Again, it's a tricky one because obviously the price action is to the downside, but what you can see without going into too much depth is that in terms of liquidity, we're coming into it now. Yeah. And there's quite a lot of ranging here in the past, so it could get quite up and down, choppy here while people start to reaccumulate all the way down to the value area low. So we're not far from the price getting stuck effectively. That's what I'm saying. And obviously, and this is the thing, if we get stuck here, that will flatten out the momentum a little bit. And then realistically speaking, to be honest, we really need to go up. I do think that way, just simply because that's the value area low of this overall range, and then losing it will take us down to 3.1. So there's a bit of a gap between 3.5 and 3.1. If we do get down to if we do go down to the value area low, which is at 3.5. You get quite rangy here and a bit of choppy if that's possible. If we hold here, then we hold here, that's fine. And so obviously it'll be nicer to hold here. It would be, but I can see clearly that the push is down. You can see that it's continuing. So it's hard to stop this without people just kind of slowly stopping. And obviously we've come through that gap quite quickly. Now we're coming to an area. Should we go up? Should we go down? That's the question. I think we want to go up, because again, if you get into this situation and then you go down again, you're just causing more, it's just causing more difficulty for the price to go back up. Yeah, because then that becomes a little range of volume that could prevent the price from going up. That being said, it's happened in the past where we've ranged here and gone up and then just gone right back up, and it didn't really matter, but it did, because you can see as the price came up, it still took several days before the price actually was able to go continue. Here I think I'd like to see us forming some kind of bottom here. Ideally some kind of pattern would be nice, and I think that's really what we want, don't we? We want a little bit of a pattern to form, some kind of something like this. Actually, looking at this at the lows, that was nice, something like that. This was nice too, except it failed. But you know, you want some kind of pattern forming, and then we need the price to reverse. And so here you can see there's a little bit of an inverse head and shoulders here, after you had a little bit of an explosion there. So that's kind of what I'm looking for here. I'm looking for some kind of bottoming pattern to form. Can't see anything yet, and so I'll be keeping an eye out for that. Okay, let me hide these. David is saying this is the golden pocket too. Okay, let's have a look at that as well. Put that in. So the other thing to do is, once you've got your retracement on the way back up, which is your resistance, you've also got your retracement on the way down, which is your support. Which pivot do you use? You can use any of them really. You could start here and then move to there, move to there, and just keep on moving it up. Now, yeah, so you see we got a nice reaction to golden pocket. I think really what I would want to see, whatever happens, is that I don't really want to lose the value area, honestly. It just doesn't, it would be so depressing if we do go down and we lose it. Yeah. I'm not saying it can't happen, because obviously in crypto everything can happen, but I'm not expecting it. But then again, I didn't expect such a crazy sell-off. I thought we'd have a little bit more resilience, especially after we had that kind of buy up. It was a V shape which failed, and considering the V shape failed, it hasn't been that crazy. Like, it's taken a long time to come down. We're down 23% from the bottom of the failed V. It's not unbelievably bearish in that sense that it should have been worse. Like, if you were looking at a massive rejection, which we potentially were, then after you lose the V, you should really be going down. You know, it should be a big sell-off. And it's actually just kind of gently continued. Maybe it's kind of slowing down as well a little bit, because it is kind of rounding up actually, like that. It's kind of struggling to keep on keeping the steepness, but we still need to turn this around. All right, so let's have a look at, so that's the golden pocket. Yeah, I think the bottom of the golden pocket, and let's just see, that one's higher up. Oh, that's fine. Yeah, look at that. Look at those liquidity levels there. Untapped, golden pocket, daily, daily, daily. We're into the weekly, which is offering support at the moment, and then we've got the golden pocket and the value area low. It's a bit of a range, but it looks okay, doesn't it? At the moment it looks okay for accumulation. Now, the other thing I wanted to have a look at is the bull market volume. So let me just mark those out as well. So this is the volume that's come into the bull market, and so unfortunately, and this is Bybit, so the volume data might be somewhat different on the other exchanges. For some reason, people have sold into Bybit. They bought on KuCoin and sold into Bybit. Wasn't me. Wasn't me. Let's mark these off because I'm going to get confused if I don't in the future. Can't say that that's not bearish. It's not bullish to lose the bull market value area low. Right, so we've got that, and then obviously we've got our launch price, so I'm going to mark that off as well. Bull market volume. I've got to check that for. Okay. So to the high time levels. Unfortunately, we're losing areas. But we are into big support, coming into big support now. So we have to see how that plays out. let me do this other thing as well. From the all-time high, I'm going to do again fan and see what that looks like. So we're quite far away from the 2-1. We couldn't get over the 3-1. So not really important at the moment. Let me just have a speed fan as well. That probably won't be important either because it's quite very much. Okay, that's fine. Have a look at this. Well, I'm not finding any clues that's given me any extra confidence about how we turn. I do know that we're coming into some kind of major support area now, okay, just based on the way the liquidity distributes itself. it's still quite difficult because there's still gaps, aren't there? So you look at these levels, you think, but there's still a 2% gap. There's still a 3% gap. So I am expecting a little bit of turbulence in and around these areas down here. So naturally, it's probably a good idea to get your grid bots working, probably, and just let the price go up and down, whatever. Who knows? That's what I think at the moment, until we can see something develop on the higher time frame. So it's very deceptive on TRVL to look at the lower time frame, because you see the price go up and you think it's going up, but all it isn't really. It's just someone market buying instead of limit buying when they filled their bags. What we need to happen is some kind of something, some kind of topping, bottoming something, yeah, to form. Looking at the historic price action, it can be down and up like this with a rejection, a little failed rejection. It could be consolidation with a down and up. Those are the two examples that we have. And so we have this kind of down and up, but it usually, what I can see is there is sometimes a consolidation with a down and up. We had something similar here. Consolidation with a down and up. With that kind of same idea. If we do have a consolidation like this, we'll see it. And it might be very similar to something like what we experienced here or here. They're quite similar, aren't they? The reason why they're quite similar is because you've got downward momentum pushing the price down. So naturally, it's a good place to bot, isn't it? We get that kind of price action here. Good place to bot, set your bots running, and you can, it's like 10% range potentially in this small area, 10% range. I have no idea what's going to happen. I do think the price will kind of try to find support here, just like it tried up there. It will try, yeah. And so it's definitely not a good idea to form a bias here, just simply because it probably will need time to play out. The only way we'll know if what you need to see for a bottom, if people are like worried about FOMO, and I think people are worried about missing the move. I hear that a lot. I don't want to miss the move. I want to catch the move. And so if you're worried about missing the move, obviously you have to have a spot bag, so you're never worried about that. If you have to have a no touch spot bag for your coins for the duration of the alt market, Bitcoin market, whatever, for the duration of whatever, then you're not going to get FOMO, because you're not going to be like, oh, it's going up, I need to buy some, because you'll be like, oh, it's going up, I already have some. And that's really important. And I know a lot of people like to be like, they're worried about their value dropping, so they're completely out of crypto and they're trying to get back into crypto, and they never really do, because until it's too late, and then they FOMO back in, or they just feel depressed because they missed the move. They still missed the move because they didn't have a no touch spot bag, which is no touch, and effectively you're accumulating TRVLs. You don't really care about the fiat. Yeah, you're looking at the overall market, you're looking at the overall price chart, and you're eyeing out these levels at the top, these higher all-time high levels. You're thinking to yourself, this is the way I think, and so I don't think it's a bad idea. You're thinking to yourself, look at where we are, and look how much potential increase in value there is to the all-time high. It's a 3,800% increase in value. That's almost 40x from our current location. And just based on the liquidity levels that I've drawn, the reality is that if and when in the future we cross 9 cents, 9 cents is around here, make a higher high, take out these highs, we're probably gonna quickly go up to higher numbers very quickly, probably, yeah, with a big pit stop at 28 cents or 30 cents. That's the reality of what's going to happen. So we can always, I think there's two strategies. I don't like the idea of waiting for the move to begin and then jumping on board. Personally, I like to just accumulate and scale in, but obviously people are worried about the value dropping. So that's the tricky one. So the way to overcome that problem is with a dollar costed average approach, like a time weighted average pricing. So every period of time, you're just buying a little bit. Yeah. And so you're averaging on over time. And then over time, you're getting a time-based average, not a dollar-based average. And so if we are bottoming out here, if we do kind of form something here, you could wait, try and catch the bottom, but then do you scale in at the bottom, or do you go all in at the bottom? You know, that's the question. If you scale in, you still be buying higher up. You know, you're not going to buy all the way at the lows, because if you're scaling, you'll be scaling up. Price will come back down. They won't really make much difference. It will only make difference in this circumstance if you wait for the absolute, what you think is the low, buy your whole position, your full position. The price could still go down. Could still go down. You don't know. So to protect yourself, you're giving up catching the absolute low. You're giving that up. So it's a trade-off. It's a sacrifice between an absolute low position and the uncertainty of knowing how low we're going to go. Okay. And so honestly, I'm not going to try and guess, because it would be foolish, because I have no idea. That being said, I think this is a good place. It's the golden pocket of this whole up move and the retracement. That's kind of the first place that as a professional trader would want to get involved, the golden pocket. If you see the price finding support here, this could be somewhere here, could be the what? The value area low, the golden pocket, lots of liquidity levels that haven't been traded through yet. And there is a bit of a higher time frame SR flip going on here as well. So I just want to show you that. There's a lot going on here. And so the time has come. I never thought we'd be at these prices again, but we're here. And now this is crunch time, isn't it? There's a little bit of an SR flip going on here. Okay. You can see how the price comes into resistance multiple times, and then you have the breakout, fake out, but it held. So we have a little bit of an SR flip going on again, about 3.5, 3.6. And I think I say this a lot, I think we're coming to the end, but I am a little bit concerned about momentum. So that's the only thing that's kind of on my mind. Let me just have a look at them. Actually, I don't even know what these EMAs are. What's that one? It's 200. What's that one? They should have the numbers here. No, I've got two 200s. Why have I got two 200s? I'll get rid of that one. And then I have got the 200 SMA, yeah. And the 50, I like the 50. It's not downwards, is it? It's just kind of flat. 3-day moving averages. Look, the 50's going up. The 200s is flat. The EMA 200 is still trending down a little bit, but we've had that kind of move up and down twice now. So that takes it. It does take the steam out of this momentum when you see that happen. This is the weekly 50. We've come underneath it this week. So now, right now, if you buy, you're buying cheaper than the last 50 weeks average price. So we're below the equilibrium point. This is the kind of the moment of buying cheap coin. You think about the average price being above us now. We're buying it underneath the last 50 weeks average. Yeah. So that's quite a good price, isn't it? Not a bad price. The other thing you can do, I mean, if people really just want to be patient, oh, look at that. This is the daily. Look, there's a bit of strong resistance here, somewhere about 50 cents, 5 cents. If people are looking for the move, this is kind of you kind of are waiting for a little bit of a consolidation period. I don't think there's any rush, so I don't think people need to worry about a V-shaped recovery if that's what you're worried about. I think that's the big thing that gets people, is they FOMO in because they're worried about a V-shaped recovery. In any case, when you have a spot bag, you can you don't need to FOMO in. But there's also, I mean, I don't want to say don't buy, but there's also no rush at the moment, I don't think, either. And that could change if you see a really strong bullish engulfing, and the higher time frame the better. Yeah. It didn't have one here, but we did. You see, you have a bullish engulfing red candle, and then you have a bullish engulfing. That's kind of what you're looking for, bullish engulfing candles, because in a low liquidity token, you're going to get that. On the day that the price wants to move, you're going to get a bullish engulfing. So you've got a red candle followed by an engulfing green candle, which closes, it completely overshadows the previous candle. So I'm looking at the daily time frame. I'm looking at the situations where the price did move. You do get bullish engulfings that don't go anywhere. So if you do get a bullish engulfing, we need to see follow through for that to play out. And if you don't see that, then it's obviously some kind of trap. But you want it to be at the lows. You want it to be a bullish engulfing. Yeah. And I mean, that was a crazy bullish engulfing, and look, the price ranged. This one, it was a massive bullish engulfing. The price ranged until it finally kind of broke out. But that's kind of what you're looking for. Okay. The question then is, do you FOMO in on a bullish engulfing because the price could retrace all the way back to the start before it kind of moves, or do you FOMO in? Do you just, because you see this is a bullish engulfing too. You have a bullish engulfing candle there. You have a bullish engulfing candle there. There's quite a lot in before when the price is going to move. You're going to start seeing these bullish engulfing reversal candles. I don't see why that wouldn't happen. So people might be, I don't think it's a bad place to buy, but people might be thinking, you know, how low could it go? Well, you don't have to worry, because you can just wait for a bullish engulfing. The price does usually go up. It can come back down, and that's the problem. So it doesn't signify the low, but it does signify impending upwards direction. And only occasionally we had some traps. There was a trap. That was a trap. Some kind of pull trap. Context is important too. Personally, I prefer to see some kind of pattern, some kind of bottoming pattern. If you go to the higher time frames, it might be easier to see what I'm talking about. Maybe not. No. Maybe 3-day chart is easier. It's pretty easier on the. Usually when you see like these big weekly candles from the lows, that's also what you want to see. So the thing is, if we start seeing that, if we start seeing a bullish weekly candle, well, the price is going to be back at 5 cents or 6 cents. Yeah. So it's that's the challenge, isn't it? What do you wait? What do you wait? What's your signal for entry? And how is that going to impact your price point where you enter? I still think dollar cost average approach is the best one. Good morning, David, Tom, Dev, and Craig is here. Apologies, Craig, I missaid your name. I think Dan is going to be here. He always is. So anyway, good morning to everyone. Any thoughts on this, guys? That's basically what we're looking at. The momentum is flat. I can explain market structure. I'll do it on another token. Actually, I can do it here, but I can do it here on the daily time. Nah, I'm not going to do it now. I'll do it on another token. Just trying to see if there's anything else that I'm missing. Momentum's quite flat. We've just come underneath the midpoint of the monthly. I didn't really want to see that. I wanted to see the monthly midpoint hold. I was expecting a bullish June. It would have made perfect sense, and it hasn't. Okay. I'm just having a little think. Sorry for the silence. Would that be a monthly impulsive move? Look, on the monthly time frame, it's quite impulsive. On the lower time frames, it's pretty shit. It's like a higher time frame impulsive move. Could that be your first kind of monthly impulse? 4 green months, that's quite impulsive, isn't it? And the rest is just noise. Did the impulse begin at the all-time low? That's what I'm thinking now. I'm just trying to make sense of this price action because it's been very difficult to I'm just trying to think outside the box and see if I see something else. I initially thought that was it. One. That's what I did initially. Initially, I was analyzing like that. One, two, three. 1, 2, 3. 4. 1, 2, 3. 1. Good morning, Tim. Beside you. 1, 2, 3. 1, 2, 3. 1, 2, 3, 4, 5. Not sometimes, Tim. Most of the times, the best trade is no trade. I'm not in any trades. I'm just kind of taking a little bit of a breather. Going back to analysis. Mohammed is saying that BTC is showing higher high in 15-minute time frame. I'll have a look at that. Haven't looked at BTC yet. As you can see, TRVL is a work in progress. One, 2, 3, 4, 5, 1. ABC. C, ABC. One, 2, 3, 4, 5. 4, 5. I'm using fib extension to check my waves. I'm just redoing it because I should be able to predict the future with waves, and I don't know if I've done a good job. And I don't like that I haven't done a good job. This is my new updated count. I'm just starting at the all-time low. I'm trying to make sense of these waves. I don't like the way it's up and downy, and it's kind of, the impulse is just one candle impulses, but I'm just going to roll with it. I'm going to imagine that the all-time low is where it began, and it ended up here. I'm just going to assume that that whole thing is one way. I'm just going to make that assumption, and try and count waves inside of that move, and then that's kind of where I'm at now. We're back into the golden pocket, as I've already explained, on this higher time frame pullback. See that? And we're coming slowly working our way towards the value area low of the overall range. These are all our higher time frame levels. And what I'm suggesting is that we're coming into support now. We're coming to kind of volume to the low of the value area of this overall multi-year range. We're coming to the lower part of the value area into an area of interest where you've got the golden pocket, you've got lots of untapped levels, daily levels, and obviously we're into the weekly level now. I think the price should hold here for a while at the very least, just simply because you can see previously that we ranged here for a while. It doesn't make any sense for the price to just go through like that. It wouldn't make any sense to me. That this is kind of where we want to be. And then I think if we can kind of flatten out this momentum, and if crypto starts to get a little bit more bullish, then we could get out of here. And obviously, if that doesn't happen, then we have a little bit of a gap underneath us until we get to lower levels. I'm not enthusiastic about that, to be honest with you, but it is what it is. Just taking it as it comes. Potentially, this is our wave one, potentially. Okay. And there's two ways I did time in the past, and it has worked. Time has worked. So I'm going to do fib time again now. I was using the weekly level, weekly time frame. We were able to I was able to kind of see the all-time low with fib time, but you have to use the weekly time frame to get the pivots. And so in hindsight, and hindsight is clearly 2020, the 618 from here to here to here, from this high to this low to this high, was the low. In hindsight, the 1-to-1 was actually the high, wasn't it? It wasn't the low, it was the high. We got a good reaction. It went all the way down to 5 cents, went right back up. But in hindsight, what you're looking at is the high, aren't you? Yeah. So hindsight is 2020, as they say. Okay. So down, up. This is what I'm wondering. This takes us to November. Yeah. And I just want to prepare you guys for that. According to this, based on fib time, our next major pivot is 18th of November. And based on this idea, that could be the low. There's a long way to go, potentially. With the high being put in April. So could we get a 5-month rally from November to April? And potentially we're in accumulation. I don't know. Could we get a lift off first and then put the low in to go up? I don't know. But just bear that in mind. So we've got this higher time frame fib time, which is actually eerily is actually playing out. And we just have to see what happens. Okay. So what's people saying? I think if we do get a relief rally up to 9 cents, just bear in mind that 9 cents is still strong support resistance. Yeah. And obviously it would only be a relief rally. I don't know why we wouldn't get a little relief rally. But will it look bullish if we have a relief rally and then go right back down? Not really. It would look bearish because you're putting a pivot and then you're losing it. But if you look at the higher time frame, like I'm just imagining that this is like a wave one up to there. We're obviously in some kind of zigzag. Could we get an ABC like that? That's kind of what I'm thinking right now. Yeah. Would the price go down in November, October? We were expecting a rally. I was expecting a rally in the summer, to be honest with you. It's just something to bear in mind. It doesn't have to play out like that, because potentially if you go up to 9 cents, we go all the way up to 9 cents, you could do that. I don't know, but it depends. It depends on how the price moves. So I'm imagining a wave one there, and then I'm imagining that we're in some kind of deep correction. This is not a wave one, this first part. It has to be this one. So I'm just assuming, okay, the count is all messy. I'm just making an assumption. And so therefore I'm not also making an assumption that we're in an ABC correction here. At the moment, this is just the first part of the correction, isn't it? It's just the down part. So I am expecting at the very least some kind of up part if this continues, and then another down part. Yeah. That's one idea. Or maybe, I don't know, but maybe this whole correction is lots of ABCs and it just looks like that. I'm not sure. I'm not 100% about that. So that's just I'm changing my idea a little bit just because I want to see if that plays out. But effectively what I'm thinking of is that was your one, and we're obviously in a 2 now, and we're trying to find support. This is a zigzag correction, so it's quite a deep correction. Technically, if we're in a 2 there, and then it can go, the invalidation is the all-time low. Technically, that's the invalidation. So that 2, technically, if that was correct, it would be all the way down there. So I'm just making a few assumptions here, even though for me this isn't crazy bullish. Bullish. Impulsive. This isn't crazy impulsive. Okay, but there are impulsive parts to it. So that's why I'm kind of reevaluating. There's a bit of an impulsive part there, impulsive part there, and there's an impulsive part there. And so I'm just kind of reevaluating that. The problem is you have to look at the higher time frame, and I like to look at the impulse on the lower time frame too. So if that's impulsive, then what's this down move? Is that a down? Is the impulse? Is the down move impulsive too? That's the question. But at the moment, it looks like we're in the first part of the correction. So I am wondering if we have 2 more parts to this correction and we have a little bit more of a prolonged correction. That's what I'm wondering right now. I don't know. This is too prolonged. Yeah, it's after the bull market. It doesn't make any sense to me. The only other thing that I was thinking, and this is invalidated, I was always thinking that this was our first impulsive move and this was corrective. The problem is we took out the low here, which resets the count. But I just want to kind of ploy with one idea. Let's have a look. just doesn't work. Excuse me. Where's that other fib time? It's there, wasn't it? Let me do it to that pivot actually. Okay. Yeah, so I think there's a major pivot and sometime in the third week of November. So that's something to keep an eye on. This is the next fib time that I've got just based on this move from this low here to this high. I've taken it to this one because it matches up with the previous fib time. Maybe I shouldn't actually. Maybe I should push it to there. But it doesn't. This only gives us 1 week apart. So I've got a fib time here at the end of June. Yeah, based on this move. 24th of June. Okay. So from here to here, assuming that that's one move, the 618 comes into the week of the 24th of June. Okay. So if we are going to see some kind of zigzag correction, I mean, I'm hoping that we could get an impulse like that. So from June to August, we get some. We have to see how impulsive and how, if it's impulsive or corrective. We have to see how that plays out. Could we get a new impulsive move? Of course we could. We could always get that. Could always happen. Yeah. Just have to, when it happens, we just have to see it and then say we're in an impulse. But potentially in about 2 weeks time, 1, 2, to see if this bottoms out. Okay. In any case, that won't be a bad place if we come into support and you're coming in on fib time, on a corrective fib time. That's not a bad place to time if you want to time it, because you can clearly see that that's the one, that's the 618. Yeah. Have a look at something else as well, because I was looking at this before, and right, I'll just do this one other thing and then I'll wrap up. I'll just have a quick summary, okay, so I can make a short video. So the idea is this: you watch me live, you watch me analyze, right? You watch me commentate, you watch me say shit and do shit, and maybe even trade and just get distracted. What I'm going to try and do is just do all my normal analysis, but I'm also going to try and do a really short recap, just so I can cut that and put that on the web, because people have been asking for short videos, and I don't think people are interested in learning how to analyze, so they just want to be told what is it doing today, and should I buy or sell. So I'm going to try and do that. So I apologize if it sounds repetitive. Got to please the audience, right? So I was looking at this trend line before, and so yeah, that's problematic. See that? So I think probably I think as time passes, we're going to get back above this line. We obviously had an explosive. We failed to hold support. That's basically what happened. Should have held support here at about 5.5 cents. That's really where we should have held support. It should have held there to go up. That would have been okay. And we've fallen back down. You see, it's reacted, and then reacted, and then flat. So despair not. It's always possible to do that. Yeah, it happens a lot in crypto. You get little fake outs. You get people without diamond hands dumping their tokens because they feel like if we weren't in a bull market, I would be on the same page. I would say game over, guys. Just dump your tokens and move on to the next project or move on to the next bull market. Because we are in the bull market, I'm not thinking like that. Yeah, and I don't know whether you realize it, but Bitcoin looks quite robust and bouncy. There's a lot of interest in buying Bitcoin, and that does have an impact on the rest of the market. So this is something interesting on TRVL. I think it's an opportunity, but I obviously don't want people to feel like they're catching a falling knife, and so therefore it would be good and sensible to let the price settle down and stop falling and then start accumulating. Obviously none of this is financial advice, but these are my levels. So I've got my volume levels. This is the overall range. I'm using Bybit. I've got my bull market volume. You can see it's pretty much in the same area, and we've lost the bull market volume value area low. Okay, but we are coming into the overall range value area low. So the overall range, the value area, we're still within the value area. That's what I'm saying. And obviously I've got my higher time frame levels. So these levels are liquidity levels that are untapped or untested or untraded through, except the current one, which is the current weekly level, which is showing a little bit of reaction. And so here you can see that underneath the price we have an area of support all the way down to the value area low. These are liquidity levels, and what I've said before is because we were ranging here for a period of maybe 4 weeks or 5 or 6 weeks, I find it very probable that we'll probably at the very least be here for a period of time. So my best advice for people is just start botting. If we start ranging here, start botting. Yes, get your grid bots working, and the move here from the value area low up to that weekly level. If we lose the weekly level, it's about 12%. And so it could be quite volatile here, people buying and selling, But effectively what you'd want to do is, what we want to happen here is for the price to find some kind of bottom, okay? That coincides with this golden pocket. So the golden pocket from this pivot low to this pivot high. So we're coming into the golden pocket now. So we're coming into a really strong area of confidence. We're still within the value area, we're still within the range, and that's all that really matters, that we haven't lost the volume range, and now we're coming to fresh liquidity levels. So this is a golden opportunity for the price to find support. I think it's perfectly acceptable for the price to find support into the value area of the overall multi-year range, and it's perfectly acceptable for the price to go right back up to the value area high, yeah, and be range bound a little bit here, be range locked. Now it'd be nice to go up, because then when we go down we can find support again. That would be nice to see. That's kind of what I want to see, but obviously it all depends on the wider market. I think altcoins are coming to the bottoms. And then the other thing I have in my mind, so I've updated my Elliott wave ideas because I'm just trying to make sense of this crazy chart, and my update has led me to a new conclusion or a new kind of analysis, and that's just based on some assumptions. The assumption being that it started at the all-time low, it ended at this kind of move up high. That's my assumption. I'm just making assumptions, looking at these candles, trying to make head nor tails of them. Makes no sense sometimes because it's just confusing. But there it is. Let me see. That's kind of me trying to make sense of it. 1, 2, 3, some kind of 1, 2, 3, 4, 5, and then the main thing was to count this 3, and somehow in all that mess there potentially is 5 waves, 5 waves, and 5 waves, okay? And then the rest is just corrective shit stuff, whatever. So that possibly means that we are in this corrective move now from the top, Whereas I had this wave here where, you know, it's not easy. So I don't want to like pretend that I know everything. So I really don't. And potentially we're still just from the top down, we've just been correcting. The interesting thing about this down correction is we had this, not that one. We've got this down corrective line, this from the top down to that pivot, which we broke out of, and we've been above it. So even though we're correcting, it's not as steep as it was, and it is trying to flatten out. And effectively what's happening is that the market momentum is catching up with us. That's what I think has happened. That's part of the reason why I think we didn't go up as much as I was expecting or hoping for. And so I've shown this, that the moving averages on the higher time frame are still quite, well, the 50 moving average on the weekly has gone flat, but if you look at the 200 EMA on the daily time frame, is it the daily? You can see there's still some kind of down move in the momentum, and it's just taking a little bit of time to kind of flatten it out. That's one excuse. I don't know, maybe there's other excuses, there's other reasons. Yeah, that's just, in my mind, I think momentum plays a large part in the way the price moves, and unless you can kind of find support higher up and then continue, it's very difficult to turn the momentum. So far we've had like 3 kind of rallies in the price action of TRVL. There's 1, there's 2, 3. It's not a bad token to find rallies. You know, they do come, and they come quite periodically, don't they? When you look at the way they've come from there to there. What is that? It's not a 1-to-1. It's like the tops. Is it 1.382? Let me see. No. Who knows? So anyway, that's kind of where we are. The other thing that I was looking at was this, just on this move, potentially we're coming to a pivot, a time pivot on the week of the 24th of June. So let's see what happens in that week. And what's obvious to me now is that this pivot was at the lows, this pivot was at the highs. So potentially there could be a low put in sometime in November. Potentially. We have to see how this plays out. It could be a low, it could be high. It doesn't really matter. It just depends on where the price is at the time. If it comes into the lows, or if we go up, it comes into the highs. We have to see how that plays out. Okay. All right, any questions on TRVL? That was my short recap. I'm just going to cut out all of that analysis at the beginning and just have that last minute recap. And if people want more, they'll just have to go and watch the live video. All right, that's it really. So let me just put these all back up. And then I'll just post the link. Let's have a look. What would that show on? It's kind of that pivot wasn't right, was it? That's the one. Let's put up pizza down. Yeah, maybe the first of the month, to be honest with you. Maybe July. It's with time pivots, it's hard to pinpoint. Maybe July, maybe the beginning of July. Okay. Right. That's that was TRVL. Oh god, there's a lot of people here. Everyone's just waiting, huh? Waiting. All right, that's TRVL. Again, apologies, Dan. My bad. Yesterday I really fluffed up, and it won't happen again. Trust me, or don't. But I'll be on it. I'm serious. I was really embarrassed, actually. If anyone has any other input, you know, feel free to reach out. People see different things, you know, it's all quite subjective. I like to look at liquidity levels. That's my primary focus, because then I can see how the price is moving. You know, we had this kind of trend line here as well, which we've unfortunately lost. We have to reclaim these lines, yeah, in the future. So that's also how you see strength. When you have levels that are lost, you can be patient if you want to be. I think it's a really bad strategy to sell like this in the bull market. It's a better strategy to accumulate. Just keep on accumulating, because the bull market's not over. And you know, we know this token has the potential to impulse. Yeah, it does, because of the low liquidity environment. And so that's why I say just it's a better strategy to accumulate. That being said, me personally, obviously I've got my higher time frame levels, volume levels being the most important. If the price can come to the value area low and find a little reaction, yeah, then I'll be looking to really absorb the price here, because that will be normal. That will be perfectly normal if that happens. But in the meantime, it's just a normal time weighted average price approach, dollar cost averaging in over a period of time. And I'm wondering if this is some kind of one wave down, and do we get another wave up, and do we get another, dare I say it, wave down? I am wondering, will that hit November? I don't know. I'm not saying this is going to happen. I really have no idea. Yeah. So don't think that when I say it's going to go down, it's going to go down. I don't know. But just for shits and giggles, I'm going to just entertain this idea. Okay. Activity. How far would that take us? I'm just making this up here. It'd be hard to see, huh? That kind of price action. It'd be very difficult to see, but as long as you don't make an all-time low, you hold the low, that would be a perfectly acceptable corrective move on the initial first wave. The only condition to that this idea would be that we don't make a new all-time low, we hold the all-time low. And who knows? No one really knows what's going to happen. It would require Bitcoin basically to drop from the end of August, or just be bearish all the way through to sometime in November, December. This actually is a very deep correction. A more bullish correction would be the last part to just wherever we put the pivot here, to just be a little swing failure of that pivot coming into the 618 of that trend based, and obviously the assumption is that this first trend based pivot comes to the value area low. It all depends where it lands. Yeah, no one really knows. I'm just making an assumption from the high to the value area low, and then you do have some kind of ABCD kind of corrective, higher time frame corrective pattern forming here. If that was to happen, that's how, this is what it would look like. Yeah, so you're basically looking like something like that. That would be correction complete. As long as you don't take out the low there, then higher low, then you could potentially impulse out of this. It'd be very impulsive to come to for this to play out. No worries, Dan. Real cock up. So look, I'm not saying this is going to happen. I'm just saying that if it happens, yeah, then you know what to expect. That's all. Yeah, I'm not saying it's going to happen. I have no idea. It's just very speculative right now because we haven't even formed the B. It could make sense if this whole thing is a 1 for us to have a zigzag like this here. And we've obviously seen that in other tokens, Slerf being one. It'd be very weird. It would require Bitcoin to really start pushing down and falling down, and it'd become really desperate from the period of end of August through to the end of the set. It would be very bleak. The whole market would be bleak. Tremendously bearish period. And if you do manage to get down to here, that would be a golden opportunity again. How would the whole chart look if that was to happen? I think it would, don't know, it doesn't look great, does it? I don't really want to see that happen, to be honest with you. I think that wouldn't look great. It would be correct. It just wouldn't look great. I'd rather us just somehow go up. Personally, I'd rather us to go up to 9 and then fall back to a higher low here at 5.5 or 5 or somewhere like that. For me, that would be better. I don't know how that looks either, because probably down to the point of control. If we can, I don't know how high we can get. That's the thing. I think if people still are bearish, they're not going to be buying TRVL at market. People only do that when they feel like when Bitcoin is going parabolic. And that's the question. What's it going to take for people to buy TRVL without selling? So anyway, we'll keep an eye on this now. I'm going to keep a track of this, and then we'll see what happens. I've really gone into this for a long time, so I hope I haven't bored anyone. Looking at the BTC chart, I've deleted that too. Yeah, it's looking quite miserable, huh? Fear not. Technical analysis is here to tell us that we've just lost the value area low. That's happened before. Yeah, so I've explained this in previous times. You see here, you see how we were at the value low is here, and it was quite bleak because in October, when everything was starting to pump, we actually lost the value area low. But look what happened. It just kind of ranged here for a little bit until finally what happened was that the value area moved, it shifted, and so it basically encapsulated the price action until we went up. Okay, so it might look bleak now because you're looking at it and going, shit, we've lost the value. We may get something very similar. The thing about TRVL, it's done it before. Why can't it do it again? And this sell-off is very different to this sell-off. This sell-off was a very fast, sharp sell-off, very low liquidity. This is a much slower sell-off. And what you see, these wicks that go up, you see what's happening is the price is going up, finding liquidity and going back down. So people are limit selling this whole down move. This was not limit selling. This was just market selling, market selling, market selling. And so I think this is actually kind of better down price action because you're clearing the liquidity with these wicks. So in the future, if the prices go up, it really will slip up quite fast because you're clearing limit liquidity. You're clearing all the blocks before the price comes back down. So let's just see how this plays out. The last time we kind of bottomed out, it took a while. Yeah, we had the first kind of little bounce here, and then it kind of just took a while. I'm not expecting it to be that long, but and also the other thing which is really interesting is that we've come through this period, this section quite quickly in comparison to where we to previous times. I wouldn't be surprised. I really wouldn't be surprised if we just get right back in there. Yeah, little fake out from the lows. I wouldn't be surprised if that happens. But keep an eye out for that, because if you see, and I think Dan, you're probably thinking to yourself, when is a good time? I think the most important to see what happens with the price against BTC at this low here, basically the all-time low. That should flip. So whatever happens, the price to get back up, it has to flip back into support. Yeah, just that simple line. It's not really doing it right now. Yeah. And so that's kind of what you want to see. You want to see a previous low. Let's see how it was before. It takes some time, but eventually you do get a perfect reaction. Yeah, it takes some time. That was the previous low. It took some time. It was like kind of in and out, but eventually you end up with the perfect reaction, a really nice reaction and a really nice back test. Yeah. And so when we got that perfect back test of that previous low, nice reaction, prices back into the lows, then we had a buy up, a really big buy up. So I think that's what I would be looking for at the moment, rather than trying to catch falling knives and let the price settle, and keep with your accumulation strategy. We've got this all-time low now, and it could do whatever here for a while, and eventually what you want to see is a really nice back test. And you see that, at least you have the confidence that we've kind of been ranging around here for a while, and then we finally back above, and we came back to back test, and we see the back test. That gives you confidence that finally we're back into the range, the price range, and also we've had a back test, right? On a kind of higher time frame, like a 12-hour, like you want to see a nice higher time frame candle, right? So that's that. All right, I'm gonna go straight to Bitcoin. I'm gonna do the same thing. Am I? What time is it? 12:20. All right, let's have a read of these messages as well. Well, there's quite a lot. I am Hava. Good morning, Shabuddin. Welcome. Tim's here. The Perma Bear. RH, welcome. Alaikum. Persian. Kids here. Salam. Dan, welcome. Okay, everyone's here. Cactus Cake isn't here. Gary's here, I think. Gary said hi from the beginning. No, he's not. Gary's not here. He must be at work. Craig is here. But Gary's not here. That's unusual. All right. Okay. Just having a look. Where were we yesterday? Let's have a look. That was my trade. That was my kind of idea for yesterday, huh? And so I kind of was expecting a little bit of push up, wasn't I? Go up, push up, fake out to come back down. It kind of did what I. It kind of Bitcoin always, crypto always goes over. Yeah, but you see what it did from yesterday's idea. I thought it could probably go up and then come right back down. It's a fake out of that trend line that just came up with them. And the LAI, Bitcoin peaking quarter four. I don't know, man. I think our wave 3 is over though. I think we're gonna have an explosive end, like a really explosive end, just because we're gonna have a really big short squeeze eventually. All right. Let's see if the volume's changed first. The real changes kind of here. It's not easy right now, Bitcoin, because it's just really volatile. Maybe like a Bitcoin dominance as well. Let's see whether. So we're still. I mean, really, we need to get to that location. That's. I don't think. I don't think anything changes with this idea. To me, that tells me that we're going down, because it's not going to happen if we go up right now, is it? That's when alt season begins, I think. So how far are we away from that? It's only 4%. It's only 4% away from Bitcoin dominance hits major resistance. We got close. I wonder if alt season really does begin here, then that's very different. When I was looking at TRVL, it's going to be very different to this. We could actually, this could be like, I'm just really just also considering with TRVL that this could just be the correction over here all the way to the 1st of July, this first pivot. Just because I've imagined something more prolonged, this could be it. This could be your ABC. Okay. It's hard to know until we start impulsing. That's the thing. Sorry, I'm back into TRVL. It's on my mind. It looks like 5 waves, but it's not impulsive waves. This is corrective waves. I mean, right now it looks like some kind of like this, doesn't it? It looks a bit like that. Some kind of higher time frame downward triangle, like a really steep falling wedge. That's what to me it looks more like than what I was saying earlier, like some kind of higher time frame WXY that extends until the autumn. I think this is more likely. And so potentially if Bitcoin does dominance does top out, at the end of this month, Bitcoin dominance, then maybe July we could actually bottom out here and come into fib time beginning of July to complete some kind of really steep ABCDE type thing. I think this is more likely, and then maybe that's when we could actually begin our impulse if that coincides with Bitcoin dominance topping out. So I'm just kind of lining it. That's what I'm thinking right now, just as I'm analyzing. Sorry, back to TRVL. See, I get distracted easily, Dan. Distracted. I was just doing Bitcoin and I'm back onto TRVL. One minute. Wait. TRVL on the right, Bitcoin dominance on the left. It's interesting because sometimes TRVL goes up when Bitcoin dominance goes up, and then sometimes it goes down. So what I'm thinking of is we get to our Bitcoin dominance area of interest, and then this will basically bottom out at the same time. That's what I'm thinking, right? So just keep an eye on that. Possibly at the end of this month, possibly. And then we have to see if we can impulse. And if that does work, then we might be seeing some kind of ABCD correction here. Whatever happens, the next impulse has to be fucking huge. Yeah, I'm not kidding. Yeah, I'm not looking at TRVL and going, I'm not going to be happy or content with some kind of bullshit mini relief rally, honestly. Like, so the other idea I had really was just speculative. I really want this to end here, and then for us to go 5 waves up and hit 30 cents. Really, that's what I want to see. Yeah, if I don't see that, then there's something completely different going on here. Yeah, I'm just, based on the assumption that I made of this being a wave 1 and this potentially being a wave 2, I'm thinking now, just looking at it now, Dan, maybe we do correct and finalize our correction here on this first fib time based on this 0 to 1 to the 0.618 at the beginning of June. and then I want to see 5 impulsive waves. The first wave has to go all the way up to 9 cents. Otherwise, what's the point? We need to see mad FOMO. So I want to see that. I want to see that happen. I want to see that, and that has to happen when Bitcoin tops out. But let's see what happens. If it was to go to 9 cents, it would be here. Back test 5. I don't know. But I mean, obviously, it's all speculative. Then you want to see it. And the other thing to bear in mind, this next move could be more prolonged. So you could get your first 5 waves up to 9 cents. That will be wave 1. Yeah. So we could get just 5 waves up to 9 cents. Yeah, that will be your wave 1. Down to 5.5. 5, whatever. Down to the park. So we could be looking at a more prolonged correction here. Impulsive here. Anyway, if that was to happen, then you couldn't come underneath this as your next support line. 1, 1, 2, 3. And so then you'd be looking for a corrective move down here. Sorts, back test. And then you'll be looking for your final, potentially your final wave from that pivot. If this plays out in alt season, and then let's just go to the moon and go. That's just crazy. This is so good. That's kind of where I'm at right now, potentially. And then obviously let's see how this plays out. I'm just basing this on Bitcoin dominance being so close to resistance. Yeah. So that's really what I'm looking at to make that kind of evaluation. Bitcoin looks like a freaking mess. Look at it. Look at it. What does it look like? This looks like a mess. Looks like someone puked. We've been making lower highs. We haven't had a massive short squeeze liquidation event. Let's get rid of this shit. Oh, what is that bullish view? David, look at this. How far did it get? Close, but no cigar. It did go down, huh? After it went up there. I was close. I was very close. But the long was good, but the short idea was not. Back down to here. get rid of all this stuff. I just think we have to go down. I don't know why. I think, why have we stopped here? Why do we not go to the value area low? We've come back to the point of control, rejected. Took a lot of liquidity, but still made a lower high. It's not going up easily. Yeah, it's not easily going up. I think that was it. Like, you had that massive sell-off. That was the big buy, the dip opportunity. Can you see what happened? Like, I was watching on Twitter yesterday and saying, I did post it on my Twitter. It's the same guy, isn't it? Crypto Tony. He always like changes his own, like, he always says one thing and then does something else. I think he deleted it. Can't have deleted it. Yeah. We look to load on the dumps. Let's LFG. Yeah. You gotta be careful because it did go up, huh? But it also dumped. And so I think a lot of people, they don't understand what's going on. That was the buy the dip. So this is how we know. Basically, Bitcoin dips. You have the Bitcoiners have this kind of community: buy the dip, buy the dip, buy the dip. That's their mantra, isn't it? Buy the dip. That's what they've been saying ever since Bitcoin became into existence. They have this: let's all just buy the dip, buy the dip, buy the. They buy it, but then they sell. They're not buying and hodling. Yeah. So just be aware of that. We're not in that frenzy mode where you just buy the dip and you keep on hodling. We're not in that situation yet. We'll probably get there if and when we get into price discovery, when you just buy the dip, and it'll just keep on going up because everyone is just buying and no one is selling. Here, obviously, people are buying, but they just literally sold into that. Gap filled. That was a big, massive sell. After that big, massive sell, what happened to the price? It just dumped. Relief rally, and then, or rather, dead cat. That was a bit of a dead cat. Let me see how strong that dead cat was. It's quite a. It's not a bearish dead cat. It went all the way up to the 50% mark. It's quite a bullish dead cat. If it was bearish, it would stop at the 226 or the 382. Yeah. So when you're looking at dead cats, you can tell if they're bullish or bearish just by how far they bounce. Yeah. And that's what you would normally expect, the 382. This actually went to the 50% mark and it didn't do that because it went up so high. So by the time the people had sold off, all it managed to do was a swing failure. That's really what just happened. Just because the dead cat wasn't as bearish as it could have been, which would have been in a rejection from the first fib. If you see that, you can just pull the fibs, see where it bounces, and you can tell how bearish or bullish it becomes or is. Yeah, so if you get a really nice high bounce, then that gives you the confidence. Obviously the higher the better. And you kind of have the same idea with this whole kind of, it was a failed V-shaped recovery. Yeah, why is it a failed V-shaped recovery? Because you just put in a lower high. What you need to do is take out the high, and there wasn't enough liquidity. There wasn't enough market power to overcome the limit orders, the liquidity at these levels. Yeah, so there's too many limit orders at these levels, which prevented the price from going up further. That's what happened. Then obviously people start to take profit because they can see that the price is struggling to go up. And obviously when you lose this wash daily level, a couple of back tests on the 15-minute time frame, and you have a little bit of a sell-off. But that was a really nice bounce, wasn't it? If you want to consider that whole thing a dead cat bounce, it's a really bullish bounce, wasn't it? It was a bullish bounce. Look how far it went quite far. And so I'm not seeing that crazy bearishness right now yet. That being said, you know, we're not printing green candles, we're printing red candles. We are underneath the point of control, but we are sitting on that. We are sitting on some kind of, relatively speaking, some kind of strong support here. Okay, so just bear that in mind. We're not into these gaps yet, and so while we have gaps underneath us, we had the swing failure here. We didn't take out this lower pivot, so there was enough limit orders here. The price went up. All those people that had limit orders, they took their profit. That's why we dropped, and we're not getting continuation of the downward drop. Yeah, so why did the price drop after the price went up? Because people were taking profit. Why did the price come back down? Because people are taking profit. So we're not getting strong movement. We're just getting a lot of taking profit, which is what's pushing the price around. And that's kind of what I'm seeing in the candles right now. Have a look at XO charts to see if I see anything here, which is a bit of a little liquidation bubble at the moment, but we are, see that? It's a liquidation. So that was big market selling. We are getting bullish divergences here though, big time bullish divergences. Look, this is bullish. Look at this. Lower lows on the CBD, higher highs on price. We are getting a lot of absorption here. Yeah, this is local time frame. This is like the last 10 minutes. Getting some buying here. Are we on the VWAP? Yeah, we're on the VWAP. Could long that, huh? Could long it. Let's see what I'm doing. I got a couple of phone calls. I like this absorption here, huh? This is quite bullish, huh? This price action here, this kind of order flow. We're getting absorption. We're on top of the VWAP. Look, a little bit of reaction there. Where's the daily open? Oh, it's quite up. I wonder if the price can go all the way up to the daily open just today, just to kind of. Yesterday's candle was bullish candle, by the way. It's an inverse hammer into a support level here. That's bullish, cleared the liquidity. I think today could be a buy day, potentially, just looking at the way the price is reacting in the bullish divergence. And we had this sell, and all that's happened is it's just kind of holding some kind of golden pocket. That's all that's happened. The price has come back to the golden pocket. I think today's could be a bullish day. As long as we hold the VWAP, it could be quite bullish today. Yeah, we've come into this high volume node. We lost it, came above it, came back into it. And we're just trying to get back above this high volume node now. Yeah. See that? So if that holds, if we can hold here, then we could potentially start going up and attacking that daily level. I think that's possible. And you just have to hold this level. That's it, really. So we've got quite an easy area to lose or hold. Yeah, look, perfect bounce of the VWAP. Just hold the VWAP. Potentially. If you want confirmation, we just have to get above this liquidation area, which is the this local high. But as long as the price holds the VWAP, then you have an easy invalidation, because now that we're above the VWAP, we could be just trending above the VWAP for the rest of the day. Yeah, I think the primary target will be the daily open, but you never know, huh? You never know. With the way the price moves, how far it can get. And look, we're at the weekly level now. So we've had a reaction, a swing failure of the lows. Yeah, we've got a few more days to go on the week, haven't we? Yes, and we're at this high volume node now. We're at the weekly level. We've had a reaction from the lows. The price has gone up. They've taken their profit already, and the price is right back down into the golden pocket. So that's the main thing. They've taken their profit, and now the price is back into support. So I think this is quite good to go up. Yeah, look a little bit of a reversal pattern on the 2-hour time frame. I don't know why it would go down, because we're obviously holding some kind of support area here at the moment. Get a buy up right up to that point in control again. Get people bullish again. Now this 12-hour candle, what's the one? Don't really like it. But there's no continuation. Oh, it's just printed. Don't really like it, but at the same time, the buying tail is off the charts. It's bigger than the body. So that's quite bullish, isn't it? Got lots of buying. And what's interesting is that, and this is the thing, this is what I'm interested in. These people have taken profit. That's why the price is coming down. And then it's only held. It hasn't, you know, they've taken profit. The price is holding. It's not going lower. That's the main thing. So again, another kind of shitty range bound chop, chop, chop. Maybe we go up, hit the point of control again. Fill that wick first, and then maybe we go back down. People take the profit. I think that's kind of what we're in for the rest of this week, potentially. I find it hard to imagine the price to go down to get a reaction and then just continue going down in the same week. Yeah, I think that was the move. We've had it. It went down. We found liquidity. We're back above support lines, high volume nodes, back above the weekly level. That's kind of what you want to see. You want to see the price react. We got the reaction. swing failure. And what's good about the reaction is that we saw people take profit because the price went up yesterday. There. And then people took their profit, and now that they've taken their profit, look where we are. We're just back on support. So I think it's looking okay. It's quite bullish. It's not looking weak. Even though we put in a higher low, we haven't actually come all the way down to put in a lower low here. A lower high, I mean lower high. Maybe this is a higher low. Maybe we go up to put in a lower high, and we're just forming some kind of range here, right? So that's kind of where I'm at. I'm not like biased long or bearish here. I'm thinking right now we're just kind of range bound, right? And so there's different ways to draw ranges. You can just use this overall top range, which is what I've done, and obviously point of control is major resistance. I can't imagine that we're going down after we've had all of this selling. Yeah, so we had a lot of selling. Why would we go down? Look, all that volume. Sell, 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 sell. And we're still here, right? So effectively what's happened is people have bought. They've taken profit. We're back on support. Let's go back up. Let's go back and punish those shorts. Okay. All right. That's kind of where I'm at with Bitcoin. So it's still holding ground. It's still kind of looking quite resilient, right? I don't have any trade ideas. I think probably I'm going to long. I'm probably going to long, but I'm not going to do it right now because I'm going to get distracted again in my stream. I'm not going to keep them separately. Any questions on Bitcoin? That's all I really have to say. I don't really want to. I'm going to have to do my charts like I did with TRVL to get an overview. But actually, this is giving me a little bit of hope because I was feeling a little bit kind of unhappy. So I want Bitcoin to go to the moon. But anyway, any questions? Shab has a few questions. I don't really have any answers. I don't know. I am Howard saying, oh, season 6. I think we're definitely going to have one. But it happens when it begins when ETH pumps. That's what we're waiting for. See if BTC is pulling back. It pumped because of the ETH BTC news. Yeah, this is coming into support too, huh? It's coming back into some kind of support level here. Soon, we're very close. I think we're very close. Yeah, to alt season. We're very close. I can see that we're close. We're just not there yet. And this is the hardest for a lot of people. This is the hardest point in time. Waiting for alt season. We do want a little bit of fear in the market as well. That would help because I'm not seeing crazy fear yet. I hope people don't watch my streams and sell TRVL because I'm expecting lower. That would be terrible. Not much lower. All right, what's Slerf looking like? Crazy dump yesterday, huh? Crazy. Oh my god, it dumped a lot. Look it up. We were buying yesterday, and then hopefully people took their profit into the range point of control. Rejection. Dump. Pretty standard, really, wasn't it? We've come back into this kind of high volume node area. We're underneath this kind of down move range. So without going into too much depth, maybe I should, because Gary's watching. What was that harmonic that I have? Oh, that's interesting. Let's have a look at that. Not really. No. That's that. This is, I just explained to you what was happening yesterday, and just so you know, we had a little fake out of this triangle. As the price was coming up, we were buying because that was what we wanted to see, a little bit of strength. Buy, 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 buy. And good place to take profit, range point of control. Yeah, see that? Reaction, reaction, reaction. Even a tiny swing failure of that local, that little red wick, and then you start getting a little bit of a rejection. In a V-shaped recovery like this is a V-shaped recovery because you take out the high. What you want to see then is you want to see this neckline hold of support. Yeah, and it was trying to for a while until it finally had a one last swing failure, and then we had this big market dump, market sell. What happened then? The price came back into the same neckline, back test, rejection, rejection, sell. That was the first pullback, sell, 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 into support, one more pump up, and then more selling, selling, selling. So pretty much what I was thinking, huh? I think so. It was pretty much what I was thinking. It didn't play out exactly the way I had imagined, but I think everyone will agree when they're watching my videos that I did say I would like to go down again to that high volume node. I think that would make sense. And, you know, it's all speculative, isn't it? But it kind of did what I wanted it to do, just did it slightly differently. So let me just kind of mark this off now. Back to red. Match up. Don't like this, but let me just see how it works. Let's get rid of this so it's, oh, I can do this clearly. You get rid of all of these. Sometimes you can do too much and then it just confuses everything, right? So what I'm dealing with now is too much stuff. Let's start deleting. All right, let's get rid of that one. Let's go back to these. Let's get rid of the volume so it's not a distraction. Where's my correction? We know this first part was correct, okay? Up to that C. ABC, ABC, ABC. What is that? Don't know. ABC, ABC. I think that was correct. It's looking weirder. How does that work with fib time? the best one. This is literally the best one. Okay, that's interesting. That was the 1-to-1 there, huh? I don't like this at all. Maybe this is different. I'm not sure. Okay, let me do this. Go to friend again. I don't, what it, you know what it looks like to me? At the moment, it does, it's like this, it's like this, and it's like this, isn't it? That was our down corrective part. That's the W, X. That's kind of what it is, isn't it? So effectively, it's this to something like this. That's what we're seeing, isn't it? Let's change that to color. Okay. Again, it's just a lesson, isn't it? Zigzags, short, just short zigzags. Don't do anything else. Yeah, it's just a lesson, isn't it? Because we've seen it, you see it too often, and you're thinking, what should I do? Well, you're shorting, aren't you? So in this move here, you got some kind of ABC. 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2. Okay, that's perfect. So here you've got 1, 2, 3. So I'll show you. 1, 2, 3. Well, ABC, ABC to there, and then you had a little pump up, which was your little ABC to there. That kind of gave us, that kind of put us on time there on a 1-to-1. So from this down to there is a 1-to-1. Are we coming to the 1-to-1 now, huh? I wonder if the correction is about to be over here. And what's interesting is that we haven't touched this high volume node yet. How annoying is that? I would have wanted to see a touch, but we haven't touched it. It's been front run. And did we get a swing failure? No, high low. Annoying. Are we going up yet? It's possible. Let's just try and figure this one out. This is pretty deep, huh? A, B, C, A, B, C, A, B, C. What's interesting about these corrective moves, these WXYs, these purple ones, yeah? When you look, if you forget about the way the price is moving, these are actually moving very nicely. See that? And then look at this, look how nicely that moves. In terms of the angle of attack and the lengths, yeah? You see, they look very pretty, don't they, when I'm drawing it like this? I'm wondering if we get the same thing here. That's what I'm wondering. Something similar. So potentially it's a little bit early right now for the bottom, potentially. But we could be in the middle part of this move, which is an up move, similar to this part. Yeah. So not impulsive, but the direction of travel is basically up. And that's what you get when these kind of corrective moves, when you're looking at a WXY or an ABC. The first part is the zigzag down. The second part is the zigzag up. The third part is the zigzag down. But obviously in the zigzag, you've got a down part, you've got a kind of sideways or up part, and you've got a down part. Same with this one. This one is up and sideways and then up. And then this one is down, sideways, and then down. That's what I'm thinking. Down, sideways, down. Based on this kind of idea. I mean, that's assuming that this came to here. I'm guessing it did. An ABC to there. Then you kind of, we're in the sideways part, even though it goes down. Potentially in the sideways part. Could this go further? Get rid of those brush strokes now. Now that I've explained that, I think it makes sense. Let me just do it. I'm just making this up, but so you see we've come, the reaction here on this on these lows now, the reaction is from the top to here trend base fib brought us right back into the 618 here. Yeah, that would be quite bullish if correction was complete, just to find support here. And the question is the correction complete? Yeah, I think we're in the up part of the move, the sideways part of the move here right now. That could take us higher. It's obviously overextended, coming into support, front run the high volume node, but potentially we're still correcting, and maybe correction could be complete by Friday. Could it be complete by Friday? We'd have to see another drop though. And the 1-to-1 would bring us down to here. It's not really, it would invalidate our Elliott wave count. That's the only problem. Okay, right now the Elliott wave isn't invalidated. I do wonder if we invalidate it. I just know how crazy crypto is. I am wondering if we invalidate our count, and just this is our first wave. This is our first overall wave. Don't know, I'm just making this up. I have no idea, really. So it's interesting because it depends on how high we go now, right? If we can go right up to the point of control, back to the range point of control, yeah, for another rejection, then the last one could just be, it could just be, you know, just back down to the lows here. Okay. And but if we can't get up high now, and so potentially we're in the middle part of this corrective move, we've come to the first part, which is down. The next part is kind of sideways, which is kind of where we're at, and sometimes up. You see here it was kind of sideways, and sideways doesn't mean up or down, it's kind of just going nowhere. Potentially we're in the going nowhere phase, but depending on how far we go, then, you know, this matters, doesn't it? Because I can count the waves, and then potentially we're going for, similarly, when I'm looking at how this has behaved, the price, the way the waves have behaved, they've been quite symmetrical, ups, down, up. So I think I'm expecting something similar. Okay. And so here, naturally, you just have to see where this kind of ends. And how long it takes. That's also important. And then potentially the next part could be just something similar to the first part. That's kind of how this token is behaving, isn't it? It's kind of doing it quite symmetrically. So, yeah, you get the idea. If this is correct to that point there, so from there to there, that's the 1-to-1, then maybe Friday. And how low would you go? I think it depends. I think if you get a really strong reaction on a liquidity grab of these lows on Friday, then that could be it. Yeah. But if we go lower, then I want to see a fast down. I don't want to see a slow pro. I don't want to see a kind of up. The same thing as before. I want to see a real kind of buy up, because I think for this whole thing to be correct, you want to hold that pivot here, which would have been your wave 1, and this is the 2, this is the 3, so we're in the 4. You don't want to like a 4-hour. I don't want a 4-hour close underneath this structure here, because then that wouldn't, I don't think that would look good. So if we do go down, I want to see kind of a liquidation event and an immediate buy up. But potentially just this first high volume node, little swing failure here would be fine. If you get the right reaction and the right behavior, then that could just be it. Sometime on Friday. Oh no, according to this, it could be tonight. Could it be tonight? And obviously here I've got it going up. It doesn't have to go up. It can just go sideways here before it finds its pivot. And that would change things a little bit, because obviously if you put your pivot earlier, or if you put your pivot later or higher or lower, then potentially this could change as well. Yeah, because I can see a little bit of symmetry in the way these ABCs are working together. And why not continue that idea? Why does it have to be different? Obviously the overall path, if it went down like this, it would look better. You know, see that? It would look better, wouldn't it, if it kind of came down here? But obviously we have to see what happens, right? So we're coming somewhat to the end of this, whatever this is. Now, in the past, we were coming to the end. Remember this? Remember this correction? And what happened here was that I actually had this pivot. I had to change it. I had it down to here, remember? I was imagining this is correct. That was correct. Caught the low at the right time. The entry was not easy because you're entering a position because you're expecting an impulsive move, which did come eventually. Yeah. But how many times did it fake out? You're in position, you're down, you're up, you know, like, it wasn't easy. It was never easy. Here it didn't make a lower low, so technically it probably was easy because you just have to have an invalidation underneath here and you would have been fine. Okay, but in terms of the price action, it wasn't easy. But you see the low was basically on time with this kind of whole idea. It slightly overextended. Yeah, slightly overextended. And what's going on here? Why did it do that? And maybe the same thing will continue. So I just want us to be aware of that. So if you do, even if you do have a really nice pattern form here, which might give us some kind of a buy opportunity like it did here, it doesn't mean that the prices are going to do this again, come down, like try and figure out what it wants to do. So it might take, even after you complete this, whatever this is, some kind of zigzag, however this plays out, it doesn't mean that we're going straight up, because based on everything that I've been seeing, it is possible that we just do this and then go up. Okay, so, and then the other that you would be expecting, I would be expecting the price to go up. Actually, I am expecting the next wave to be godforsaken impulsive. We've had five really nice waves. Yeah, 1, 2, 3, 4, 5, really impulsive, good movement, and we're getting a really nice pullback, really nice correction. So it doesn't, I mean, in my mind, it doesn't matter if this was the one here, or if this whole thing is the one and we're coming down further. I don't really think it matters, because I think just looking at the way the price is moving, and with a lot of things that are happening with Slerf and Slerf Capital and all that stuff, I think it's really bullish. I think a lot of people are bullish. I'm seeing a lot of bullishness on the Telegram of Slerf and on the Twitter. So I think it's an easy one to accumulate. I think if anyone here is watching or listening hasn't got a small position in Slerf, I think that would be non-advisable. I think it would be not a good idea to not have a small position. You can wait until Friday, or wait until we hit this high volume node with some kind of, I think we want to see a swing failure, just a real test. So I'm not seeing the test now. I'm just seeing a little bit of front running, people impatient, and obviously they're taking a little bit of profit as well. We can get a real nice test with a swing failure here. That would be, I think that would be a really good long, because we're coming into that time now where this correction could end. We could get a nice buy up. That could be your wave one. Yeah, that could be. Depending on how impulsive that is, that could be your wave one. So we're almost there. All right, we're almost there. Let's see what happens. All right, I'll keep on counting, and let's see what happens. Now, just bear in mind, because we're almost coming to an end, and I know people don't like, some people want to leverage. I do want to leverage. I don't want to FOMO in either. And so looking at the previous impulsive moves, yeah, and I just want, the most important thing is that we're expecting it. Yeah, so in this whole down move in the previous correction, we were expecting something, right? We were, because I was saying this is the end. And it was hard to, it wasn't easy to do, but in hindsight it was. Actually, you just had to basically buy. In hindsight it was easy. The hard part is always the invalidation, because you don't know if your pivots are going to be taken out. Yeah, you just don't know that. And so how far do you lead your and obviously if you lead it too far, then you can lose a lot of money in your invalidation. Okay, so you're looking for confirmation, and what I call that is, I don't call it an invalidation, I call it a validation. Yeah, not invalidation, validation. And so the best way that we can learn about the charts or about the token that we're interested in is just by looking at previous price action to see how it played out before, and that will give us a clue about how it could play out in the future. Okay, and so what you're looking for effectively is the entry, is what's the best entry, what needs to happen before the price can explode, or do you just try and catch the bottom and hope for the best? That's so the first thing that's happening in this range after this correction effectively completed here, the first thing that you're looking for, see here, what happened was that the low was taken. So even though there was some kind of impulsiveness here, the low was taken. Okay, what you really want to start seeing is a higher low. I think that's really important. I think Slerf has shown us that now, that higher lows really matter. Yeah, when you start seeing higher lows, and I'm talking about higher lows like this, yeah, or higher lows like this, yeah, when you start seeing higher lows, start thinking, okay, this is starting to look bullish. Okay, especially after a swing failure. So here you can see we had a swing failure, and then we started seeing higher lows. That's something you want to see. You want to see that higher lows. You don't want to see continuous lower lows. It just means that there's not enough limit liquidity and the price just keeps on falling. When you start seeing higher lows, it means that the limit orders are preventing the price from ascending. Yeah, so it's quite important to see higher lows, especially after some kind of swing failure event. That would be something we're looking for. The other thing we're looking for is a sign of strength, like a real sign of strength. So in this context of this local range, you can see that we attempted to get back into the value area low, but then we lost it and we got back in. And then, you know, what's the sign of strength here? Well, the first thing you want to start seeing, okay, apart from the higher lows, I think, is you want to start seeing these nice buy ups, these nice big green buy ups. And so you can't go up without seeing that. It's impossible. Well, whatever you're doing, there's no way the price is going to go up until you start seeing this buy up. That's your first clue, isn't it? That's like your first indication that something's happening. Someone has just bought. Yeah. And what's interesting about this first buy up in this local range, what's interesting, a couple of things are interesting. Firstly, I'm only looking at the 15-minute time frame, yeah, and the thing is, you have to, unfortunately with Slerf, you have to look at the lower time frames, because that's when you're going to see the movement and the injection of volume, especially when you're looking at to catching it at the right time. Yeah, so going back to here, let's have a look at this buy up here. This 5-minute candle, it was quite an expansive candle. How much was the volume in that one single candle? 1 million. See that? So 1 million buy up. And the context is really important. When you see a 1 million buy, a prolonged range, higher lows, swing failure, and you're expecting a move, the lights have to be flashing in your brain. Something that's interesting, isn't it? That tells you something. Okay. So we're looking for higher lows. We're looking for volume to come in, to begin coming in. Now, I know people are looking to position in as low as possible. But the reality is, if you just buy after the volume, you're fine. Because it doesn't go down anymore because you're putting in higher lows. Yeah, putting in higher lows. Then the volume comes in. Yeah. And after the volume comes in, what really happens, I'll show you. You have a lot of volume pushing it up. Then you have this red candle, which is a take profit. Yeah. As soon as the price gets back above the top of that volume candle, it's only a 5-minute candle. So you lose it once. As soon as it gets back up, it doesn't come back down. The price never returns. See that? Just goes up and up and up. Up and up and up. Right. And so effectively what I'm saying, so sometimes you get volume come in and the price can retrace all the way down to the bottom of the volume candle. Yeah. And sometimes you get a situation like this where you have one take profit, but actually the buying continues. That's what you want to see. You want to see buying to continue. You can see that. And then the other thing you want to see is you want to make sure that the price, whatever happens, doesn't come back into that same candle. Effectively, that candle is your entry. You wait for the volume, and that's your entry. In the short term, the candle itself is your invalidation. The candle itself, you don't actually want to see the price then come back down and start losing that volume that's coming, because it means all that volume is now suddenly underwater, and you don't want longs underwater when you're in the position because they could market sell and it'll put that 1 million will come in and 1 million will come out. Okay, so you don't want to be caught in that position. But when you start seeing the injection of volume and you see the first pullback was bought up, you've got a nice red candle with volume. You want to see the take profits with volume, yeah, because that means that one, people were taking profit, and then two, that take profit was being absorbed. Yeah, so people were buying, they weren't selling or buying. And effectively, just in this single candle, you see the price, the pullback just came to the 50% mark. It's quite bullish. Yeah, so that's kind of, you see something like that. So higher lows, you can just wait for that literally 5-minute time frame. We could have, whoever's looking at a Slerf could have avoided all of this. Up, down, what's going on? Could have avoided this, just waiting for the higher lows and then the volume. Because we're expecting the next wave, you could just catch the beginning of the wave. Don't need to preempt it. Yeah. And the reason why I'm saying that is because you just don't know how far the price is going to go down. Now, you have to be awake because if you're not awake, you'll miss it, right? And that's the problem. Okay. So you have to, for that kind of positioning, you have to be awake. You see, what's interesting about that candle is it happens on the just before it happens at the daily open as well. Okay, so it's quite, to get that much volume come in to a candle on daily open is really bullish. Someone just market bought daily open in that candle with 1 million Slerf. That's really bullish. Yeah, and I'm potentially looking for something similar. I wouldn't be surprised if we have a similar experience. And so you see here the correction came in, ended, it got kind of up and downy, but effectively it was still correcting until the volume came in, which was the beginning of the impulse. What's the program to look at CVD on BTC? You need to get either ATAS. ATAS is free, or ATAS, or I pay for Exo charts because I'm just familiar with it, and I've got all the templates. And so Exo charts as well. If you get Exo charts, it's not cheap, but I can give you my templates. Yeah. So I'm happy to do that. I'm happy to give you all my templates. They're not mine anyway. I got them from someone else, so it doesn't really matter for me. Let me see how much it was pricing. You can try it out, but you still need my templates if you try it out, because it just won't make sense without them. But the one that I paid for, I'm not sure which one it is, but one of these. It's not cheap. Okay. So probably try it. I think David is familiar with ATAS. There's templates on ATAS too. I might be able to get maybe I can get the templates from David. That's the thing, you need templates. But I've never used ATAS, so I've just seen him use it. All right. So what I'm saying when it comes to Slerf is there's no need to FOMO. If you're buying spot, we're coming to the end of the correction sometime in the next week, I think. And then it might get choppy because we might see a period like this where the correction ended and then it just got choppy for a little bit. How long did that take? It took a good part of 2 days before the price actually started to explode to the upside. And there's no way for the price to explode without an injection of volume. And the only reason I'm saying that is because I just want everyone here to just be aware of the validation, what you need to see before the move begins. Okay, there's no point FOMO hoping. Just wait for the signs. Wait for the signs of strength. Okay, once you see the signs of strength, then you can catch the move and it will pump. It will pump, it will pump, it will pump. Yeah, and at the very least you would have entered what you're looking to do. And this is what I always say, you're looking to follow the whales. And so when you see a million buy at the beginning of a daily open, when you're expecting the correction to complete and you're expecting an impulsive move, then you can't. And look, what's interesting about this candle, it closed above the local range point. It was a very strong bullish impulsive candle. And for the next period of 1, 2, 3, 4 hours, you can see the price couldn't get back underneath this local range point of control. And the final hour, that was really nice volume as well, took the liquidity from the low of that candle, closed higher. It's a massive bullish. This is a massive bullish engulfing candle, closing higher. The price came back down to the bottom of the base of the body to fill the volume gap, and it just kept on going up and up and up. And so naturally, this is the area which we're looking for to enter. There's no risk here, really, is there? Because it just keeps on going up and up and up. And with something like Slerf, you're going to see higher lows when it starts to impulse. And that means you can keep on leveraging and keep on moving your stops so that your invalidation will always be above your entry point. And so that's the other thing about Slerf. When you get into a position, a good position, after you see the validation, which is the higher lows, timed right, like roughly in the right time, and also when you see that first initial volume come up, and then you see confirmation afterwards, you'll be in a really good position. So you'll be in a really good position. And what happens is that as the price is going up, you can see, if I get rid of this Elliott wave stuff now, this one, you can see that we also start to make higher lows. You see that? Higher lows, higher lows, higher lows. Yeah. And so effectively what's happening is that you're getting people put limit orders, small ones, and what they're doing is they're increasing the position size at the lows. Okay. Because they're expecting continuation, they're expecting more impulsiveness, and that's what's happening. And so as the price goes up, you're increasing your position size, but then you're also moving your invalidation higher and higher and higher, higher and higher and higher. Yeah, that's what's happening. So as you start to print these pivots on the 1 hour time frame, yeah, so you don't get chopped out, you'll see that. And what's a pivot? A pivot is when the price puts in a low and then goes up to make a high. That's your pivot, right? So that's how you know. Yeah, so you wouldn't do that because the structure has to be bullish. You're looking for higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. You see? So you're not just chasing candles and hoping for the best. What you're actually doing is calculating it, and you're putting your stop loss, your stop market rather, underneath the higher lows, which are actually the pivots. So you can scale in effectively with your leverage. And then obviously if you do get an explosive move like that, and again, it's just something to bear in mind. Yeah, you might count the waves and just hold your position, or you might be looking to take profit, or you might be looking to cover with a hedge. But just bear in mind that it's very rare to top with just one candle. Like, it doesn't really happen. Sometimes you do get like a top with one candle like there, and it drops like that. And so there's no time to react, to take profit. But you see here, you get like a nice wick, and then the second candle goes up to clear the wick, and you'll get signs of taking profit. But again, it's good to take profit at key resistance areas. So obviously the range point of control, you would take profit there. You'd always take profit at the range point of control, or the point of control. So anyway, I'm looking for that. And so in the context of what I've just been saying, are we about to impulse right now? No, we're not, because I'm looking for my validation. And in the first instance, what I'm looking for is green volume. Okay, green volume and higher lows. Okay, I've got to see them. So let me just put this into its own group. EW wave 4. Imagining this is a wave 4. Equal lows. There's higher lows here, but really what I'm looking for is a lower low, and then it's like more local time frame higher lows, like something like this, where you can see it. You can see it on this 1 hour time frame. You can see that there were higher lows here in the wicks, so you can see those higher lows here until that last low. That last candle was a swing failure of the local lows, but actually in context you're putting in higher lows. Okay, and those buying tails are really important too. When you start seeing buying tails, that's kind of what you want to see. So I'm using the 1 hour time frame now, and that's invalidation really. Yeah, there's no point catching the bottom when you can just wait for the signs of strength. Just wait for the signs of strength, and once you see that volume come in, run. We run. Yeah, you can start with a slightly wider invalidation, but if we're going to impulse, it's going to be crazy. So within a short space of time you'll be in profit, and within a short space of time you'll be able to move your stop to break even. And in every one of these impulsive moves that I've been looking at, I've been seeing that, you know, it wasn't difficult to enter at market and move your stop to break even. It wasn't difficult, and the price really ran. Okay, and Slerf has that potential, and that's why I think it would be quite interesting for people to participate in this price action. And let's see, the price has come down. You don't need to catch a falling knife. You need to be FOMO in. You can just wait. You can just wait for at the very least, you can wait for the green volume. Yeah. And the other thing is to bear in mind, in this kind of local price, the reason why the price had to kind of go sideways for such a period of time was to flatten out the momentum, because you've got this kind of downwards momentum, and it's hard to impulse when your momentum is still downward. So the reason why this goes up and down like twice, 3 times is because you're kind of trying to flatten out the momentum before you get impulsive behavior, which finally turns the momentum to the upside. And so if the momentum is down now, which it probably is, you see the 50 moving average is on the 1 hour time frame is down. You see here it was down too, but it was waning. It was waning. It was kind of like this was the last wane, wasn't it? It was kind of fading out, went above the 50 moving average, couldn't make a lower low. So effectively the momentum in that 50 moving average was diminished, and then you had the impulsive buy up. And so here, in the same kind of context of what I'm suggesting, it's too early now. It's too early to impulse. Yeah, so don't be thinking impulse right now. We've hit the 50 here, and look, we've put in a lower low. Yeah, and also we're forming some kind of, potentially some kind of SR flip here. So it's a little bit too early right now. So don't jump in long, hoping for the moon when it's too early. This all has to play out, doesn't it, David? David knows. David is the moving averages master, so he'll tell you it's too early for an impulsive move here, because you've still got the momentum of the market is still down. We need to turn that a little bit. We need to kind of exhaust the momentum, and so potentially you could be range bound, and potentially we could also be looking to go lower here. Okay, now obviously Bitcoin has something to do with it, and people always talk about the fundamentals, and they say, oh well, Slerf is a really bullish project because of Meme Chan and because of some other things. I'm pretty annoyed at the Slerf crew right now, to be honest with you, because I didn't get my Chan pre-sale. I don't know if anyone had the same problems as me, but I sent some Solana to their wallet and haven't received my Chan, and it's been launched. So I don't know what I've done wrong. I have no idea. I don't know what I've done wrong. I hope I haven't sent it to the wrong address. I doubt it, because I just copied and paste. Investing, I don't know what on. They're not very clear. The thing I hate about crypto is they're just so unclear about their communications. Like, it's shit. It's poor to none. Yeah. And let me see. I messaged the ambassador. Let me see what he says. Oh, he says, hey buddy, we've not had our allocation yet. It's all vested for the next 14 days. Okay. You probably want to. So I don't know if anyone's interested in this. So I asked ambassador. He said, we've not had our allocation yet. It's all vested for the next 14 days. They're going to pump our bags all week. GG. All right. So I don't have to worry. That's the update on Chan, if anyone was wondering what was going on. Now we know. So this is the token. It's brand new, and yeah, listen to David. He knows what he's talking about. This is a brand new token, just launched literally yesterday. I think this is bullish. Yeah, I'm saying that about a lot of things, and so therefore do your own research. Like, literally, I bought the pre-sale, so of course I do think it's bullish. But you know, we're in a really corrective time, so it's hard to buy when everything is, the prices are falling. And it may just be, just wait for the pump. Again, it's the same thing. You might have it might be worth just being patient with these new tokens. It's always good to pick up a little bit, because you're buying it dirt cheap. Look, you're getting this at 1 cent. Dan, you could take a little gamble on that. You could buy, like, instead of send me $10, you could chuck $10. I know you don't like meme coins. This isn't actually a meme coin. Well, it is, but it isn't. It's Chan is quite interesting, because they're creating and I think Tim the Chin would be interested in this. So basically, they're creating Pump Fund. They're doing a new Pump Fund, yeah. And so if anyone knows about Pump Fund, it's basically a scam. It's like all these kind of shitty memes, which anyone can pay money to launch a Solana meme, and probably most of them are probably rug pulls, probably. but you know, one or two will eventually make someone multi-millionaire, and that's why people participate, because it's a little bit of a gamble. People like to gamble. What Free Chan are doing, and I only heard of it through the Slerf crew, just because I've been charting Slerf, and so obviously I'm an active participant in Slerf going up in value. But what they're doing is they're trying to create, they're going to create something like this. But what else is interesting is, and this for me, this is really interesting. This might actually increase the value of Slerf significantly. And so, Dan, while you were saying you're not interested in meme coins, and I've had a lot of people talk to me and say I'm not interested in meme coins. The reality is when you have the new kind of when the narrative of the next bull market is meme coins, the hype is all meme coins, where everyone has the ability to have their own meme coin. If that becomes a big deal, then this project, this Chan, is going to explode, because they will create a marketplace where people can create their own meme coins. The biggest problem is the rug pulling, and I think they've got ideas of how to address that, and let's see how they do. Okay. But I think the next narrative in the market, obviously people are talking about RWA, and I think RWA is going to be a big deal. But the reality is that a lot of the retail crowd are going to chase these meme coins. And so I don't think it's a bad speculative bet, to be honest with you. I think it's a good bet. Like, that's the way I see it. I see it as gambling. You go into the news agent, you'll buy a lottery ticket. It will cost you £2 or €2 or whatever. You might buy a few tickets. You might buy once a week. This is basically the same thing, basically. But this is probably better odds of winning, and the risk to reward on this is probably more less risky. Like with a lottery ticket, when you buy a lottery ticket, you're gonna lose your money. Yeah, you're not gonna win. You got a better chance of dying in front of your TV, being struck by lightning, than winning the Euro lottery. You got a better chance of drowning in a plane probably than winning the Euro lottery. I think that the chance of this is higher, and so I think these are good gambles. That's the way I see it. You're not really trading this. You're right at the beginning of a project which is tied into Slerf, and the other thing that's really interesting is that you're gonna they're pairing up this new token Chan with Slerf. So all of the meme coins in the new Chan site will be paired with Slerf, and Slerf is going to be the liquidity partner. And so it's quite bullish for Slerf. Slerf actually becomes quite useful. And what they're trying to do, the Slerf Capital, they're trying to basically monopolize in a decentralized, weird crypto way. They're trying to take over the whole meme narrative. So they're really serious about this shit. So anyway, this is quite a good gamble, I think. And let me just have a look at Meme Chan. No, what I wanted to look was yeah. See, look, Chan, they've paired it to Slerf, huh? Look. Look, paired to Slerf on Meteora. I don't know what that is. Never heard of it. That's quite a big deal. Yeah, don't think that this isn't a big deal, where Chan is now paired to Slerf, and now how all of these new meme coins on the Chan ecosystem is going to be paired with Slerf. This is extremely bullish for Slerf, like ultra bullish for Slerf, I think. And Chan, and obviously everything else that's tied into this new ecosystem of meme coins that's about to begin. So I think it's right at a good time for everyone who's watching here, just to throw a little whatever, pocket money, coffee money, just throw a little bit at it. And you never know, like in these kind of projects, what's the market cap actually? Let me have a look. Chan, there's no trading here, it's just buying a little bit of spot and seeing what happens. Chan market cap. I don't know how to find it. It's not 4chan, is it? It's Chan. Jackie Chan. There, look, Chan Slerf, Chan Soul, Dex pairs. They're not actually on Coin Market Cap, are they? $10 million? 10 million, it says. It's quite a lot, huh? 10 million. It's gone up a lot. Look at that. It's gone up to 10 million market cap. This is against Slerf on Meteora Dex. Never heard of them. It's quite a lot of volume, 1.4 million. This is against Solana. So obviously it's gone up and it's come right back down. Bit of a profit take. Don't know how that works. Dex Screener, mate. Dex Screener. Hi, Gary. Look at the liquidity against Slerf. 2.3 million. Chan paired with Slerf. Look at that liquidity. And look at the volume, guys. Look, 7.7 million. Yeah. I'm serious. Like, everyone here needs to buy, get a little bit of Slerf, get a little bit of Chan. Yeah. I'm like, I know I put not financial advice in my description, and nothing changes. Nothing is not financial advice. Okay, but buy. Buy. Just use a time weighted average pricing approach, a TWAP. Just don't go all in. Yeah, just buy $1 a day or $5 a day or something ridiculously low, and don't think about it. Just do it, and your money that you don't care about, that really money that you go to a restaurant these days, you'll spend like $100, $50, whatever. Go to McDonald's with my nephews, you spend like £30, £30. It's a lot just for shitty food. You can put that in this. That big, Gary's saying that big drop at the start was one sniper. Don't know how they do it. Yeah. I think this is an interestingly good project. I got about, I think I got 5 or 6 Solana at the pre-sale, but I think they're both bullish, and so naturally when I'm looking at Slerf, I'm waiting for the correction to end, and then I'm going to start leveraging. I'm doing exactly what I said. I'm waiting for higher lows. I'm waiting for an injection of volume on a lower time frame. I have to see it on a lower time frame like that. I can just wait for that. I don't need to catch the lows. If you see higher lows, it helps, because you could start scaling in with a small position and then wait for the volume. Okay, but once you have higher lows, it means you can start raising your invalidation point. You don't have to keep on lowering it. You can you shouldn't do that anyway, but you can bring it up. And then obviously after the first impulsive move, you see the higher low idea continues until you have some kind of crazy correction here before we have a final pump. This could be a really good place for the price to find support somewhere here, because that's the top of the one. This is the right place. This is the right place. Yeah. If this holds, and I really wouldn't mind a swing failure here, just because I would like to see a liquidation, and then I'd like it would give me confidence to leverage. The reason why I'm saying I'd like to see a liquidation of this pivot, because a liquidation or some kind of massive high volume event where the price swing fails to go past that level, it just tells me there's a lot of market selling here, and there was so much limit orders here that it just absorbed the price, and the price couldn't get underneath this pivot. Okay, you get that kind of price action, that gives me the confidence to start leveraging quite highly, because I have a very definite invalidation. Yeah, and obviously that would be the beginning of building a position. But once you start seeing this volume come in, yeah, and it starts with, honestly, like, I'm looking at the 1 minute time frame, because Slerf moves so fast, you can often get the heads up on the 1 minute, but I'm not expecting everyone to do it, because it's quite time consuming. And then you get distracted, because like you're waiting for the next candle to print, and you're waiting for the next. That's what I do. I literally sit in front of my computer or on my phone waiting for candles to print, and try and understand and decipher what those candles mean. And but here, look here on this is the area, this is the moment, right? This is the moment that everyone was waiting for. This is the 1 minute time frame. Okay, this is the moment. This is on the 4th of June, and we were expecting some kind of impulsiveness. We were waiting for it, and we were waiting for it, and we were waiting for it, and it was kind of, it looked like it could have done it, but it wasn't. And then finally what happened is, look, first of all, we were getting higher lows, which was what I was saying earlier. You can see it. You've got higher low structure. Okay. Also, don't ignore the structure. So the fact of the matter is that the price created structure, had a little bit of increase in value, and then it just kind of couldn't get back into the structure. Yeah, it couldn't get back in. You can see that. And then the context is really important. And don't forget, it's the expectation that gets you ready to anticipate the move. Yeah, and so we're coming to that moment. If it comes, we're gonna look for the validation signs. Look at this lovely price action. Look at this. Lost the lows. Okay. I'm zooming into the 1 minute time frame now, yeah. And look, this is the 1 minute time frame. Okay, I just want you to, this is the area of interest. This is what you're looking for. So we finally lost the lows of this local range, so it's starting to look bearish. You see the increasing red volume. This is 1 minute time frame. So this is what you're looking for. And the context is really important, because overall you're looking for some kind of higher lows to form. You want to be in the right kind of area, okay, which is where we are, and the right kind of time, which is where we are. And then you're looking for your signs, yeah. And here you see, you take the lows, increasing volume, so it's looking quite bearish, yeah. And in my mind, the most important candle when you're looking at the 1 minute time frame in the lows, like, is the highest volume candle. Look at the highest volume candle. Okay, so you've got, in this whole volume range, is 1 minute candle, you've got this high volume candle here. See that? And you just line it up and mark off the top. That's your high volume candle. As soon as the price gets above, or gets to the top of the volume candle, look what happens. You get a, how much is that volume? 72k buy, market buy, 72k. Bam. That wasn't even a, oh yeah, that was a swing failure too, because you have the swing failure pivot here. So let me just mark that out. So effectively, the two things happen in this local price action, yeah, that I just want to highlight. And this is the 1 minute. So you have to, we're looking at we're looking at the 1 minute time frame, looking for an entry. Yeah, that's what you'll be doing. That's what we'll be doing. And we're ready to pounce. You get a swing failure, still make a higher low. You've got volume coming in. The key volume was this big red candle into the low here. And so how much volume was that? It's only 30k. So it's a 30k sell, not much, but it was in the context of the range here, it was the highest one. And then what happened was not only did the price come above the level for a swing failure, it also reversed the same candle. And you can see the volume here is increasing too. Then you have this injection of volume, yeah, and the price doesn't look backwards. From that moment, it's just buy, and eventually you get this is the confirmation. So this is an early entry, but there's no reason why this can't happen again and again and again and again and again. So that's what you're looking for. You're looking for volume to be reversed. If there's a swing failure, that would be really good. The continuation is injection of volume, continued volume. And then look, this is technically this pattern here is a V-shaped recovery. I'll just show it to you. It's a lot harder to see dynamically when shit's happening, but that's your V and that's your neckline. Comes back down to the neckline. Neckline holds. As soon as the neckline holds, then you have your massive buyout. That's when your million in those 2-minute candles, you've got 368 market buy, and then you have a 200k market buy. You're like a 500k Slerf market buy on derivatives. Yeah, you see that? So you have a lot of things that are happening at the same time, which are giving you bullish confirmation, and it's all in context of everything in the higher time frame, which is the higher lows, momentum going flat. So there's no reason to be early. You're not going to miss, no one's going to miss the move if you're looking for the signs of when the move begins. And then also, once that volume candle was printed, the price lost the volume, top of the volume candle, came back down. You see on the 1-minute time frame, you can see a lot. Gives you a lot of information. You can see where the price came to and found support. So it kind of filled the gap of that second volume candle, but it actually, this gap held. This volume gap held the price. A little local swing failure here. You see, as soon as that red volume, same idea. As soon as that big red volume, you see that red volume there? You see that candle? As soon as that candle gets reversed in terms of price, the price starts moving up again. It's literally, and it really doesn't come back down. When it does, it comes back down a couple of times to test. But effectively, we're looking for a few things to happen. This is like early warning. If you see something like that, little swing failure, volume. Swing failures are the best. They're really the best. So, oh, I didn't read what you were writing. Gary's writing. It started now. Started. I'm not on the volume. Anyway, so I'm not going to necessarily be online at the time that it happens. I will try, because I'll be trying to enter as well. It doesn't really matter if you miss the absolute bottom, if you catch the first injection of volume. It's really, look, if you start seeing on a 1-minute time frame a 300k market buy followed by a 200k market buy, don't fade out of that. That's your sign. It doesn't matter about this V-shaped recovery. The volume is your key. Yeah, you've got a whale buying who obviously has a lot of money and is obviously looking to buy more and more, and they're buying on high leverage. Okay, so that's kind of what you're looking for Slerf. And just be aware that if you get the same kind of volume at the highs of a range with a swing failure, then that's the top. Same kind of volume, but at the top. Yeah. So see, that's a 1.1 million buy, and it was basically sold into. So someone had a big limit order here, just literally absorbed that market buy. So we already know that a 1 million market buy is a lot. Yeah. And if that market buy gets absorbed, you don't expect another million to come in. Yeah. It just doesn't work like that. So someone obviously, maybe a short was squeezed, or maybe someone FOMO'd in. Doesn't really matter. But effectively, that signified the top. In the same way that volume can signify the top, it can also signify the bottom. And the point is that it was because the price was still making higher lows. What does that mean, higher lows? Higher lows just means that people put limit orders at the lows of these previous pivots just above, and the price fills the orders and can't go anymore. It just finds support. There's not enough market selling to push the price further down, and there's more market buying to keep the price flowing in the upside. So when you start seeing higher lows after you see kind of impulsive moves, don't get bearish on that. And then if you see a swing failure with a high volume swing failure comparative to the local range, then that's always a good entry. Always a good entry to get a high volume single swing failure into a look. You see that this is a swing failure. Look at the volume on the, I'm just looking at 1 minute candles. You see the high volume there? That's the swing. Yeah, and although even though it overshot that volume, as soon as that volume starts to convincingly get reversed, the price goes up. Yeah, so even if you miss a swing failure, it's always easy to see on the pullback. Usually when you get pullbacks on this 1 minute time frame, you're going to get higher lows. But usually what will happen is the price comes, because this is all market buying, isn't it? The price comes back down. As long as that first red candle, the first 1 minute red candle holds the price, you see the price went down, it created a wick. The wick indicates limit orders there. So the price couldn't pass the limit orders. That's what you want. You want to see that. And the higher lows, and it's the same thing every time the price comes down, it's looking for these lowest red candles, the lowest ones. It looks for the lowest ones. It's trying to get back to the lowest ones. Yeah. And every single time you see the price reacts of these low, it goes up and it reacts of these low red candles. It keeps on making high highs. What's happening here? Just someone is just literally putting their big limit orders at the lowest part of this structure until eventually the market orders are absorbed, and then you squeeze up, then people buy up, and then you have more take profit. Again, look, same thing, high volume candles take profit. That's like a 1 minute candle swing failure, just the swing failure of the local candle into a red candle, which is an order block. So you see the price couldn't get past the order block with limit orders, and it just kept on going up. And so you see this on the 1 minute time frame. When you see bullish price action, you start seeing order blocks holding the price, you start seeing higher lows, and then you start seeing high volume in the lows get reversed with bullish price action. And obviously in bearish price action is the reverse of that. And so when it comes to Slerf, we're obviously together, we're looking for potentially a big move. I'm just look, it's not going to happen unless you get a volume increase like this. Okay. Now, was that too early? Yes, it was too early. It was too early. Why was it too early? Well, first of all, the volume came at the higher of the range. That's not how it begins. If you looked at the previous examples, the volume came in straight after a swing failure. Yeah. Not at the top trying to pump the price. That's not what you want to chase. You're not chasing that kind of price action. Yeah. What you want to see is the volume coming at the lows. The smart money isn't going to come in chasing the pump at the highs. The smart money is going to catch the move before it happens, and so you look at this range. Well, firstly we're in the lows, and when the volume comes in, it's not coming into the highs trying to push the price up. It's coming in at the lows after after support has clearly held. Yeah. So after support is clearly held, if you start seeing increasing in volume, yeah, that's your clue. You don't want to be chasing volume at the highs after the pump, after the highs are taken. Yeah, like this. You don't want. I'm not saying that person was wrong to buy. I'm not saying that at all, because obviously now the price has come back up, but he's technically still underwater, isn't it? And the move, if you don't get the follow through, then you're stuck. Yeah. And so someone is obviously looking at this and feeling really bullish, and they just want to fill their position as quickly as possible because they're FOMOing. They're worried that the price is going to go up and they won't have a position. And rather than kind of that person who bought, what they really should have done is scaled in, and therefore they'd have an average position in this range. Or they should just wait for a swing failure. It's really easier. Just wait for a swing failure, then at least you're buying, potentially you're reversing volume in the lows, and at least you're not going to be underwater, and then you have a really easy invalidation, and then also the shorts, if there's any shorts, they can be squeezed. So it's always better to buy swing failures, or at the very least look for volume into the lows, because if you start seeing volume coming into the lows, often that volume gets reversed, and it's vice versa as well in the highs. It's just that we've dropped so low you wouldn't short, okay, but it's vice versa in the highs. If you start seeing volume take the price up, if you don't see continuation, then the price can easily get reversed. There was no real volume in that swing failure there, but here you see what's happened. This was a swing failure. Look at that swing failure. This was a really big one. Look, swing failure, volume. That was the right place. So a whale was looking to short, but rather than chase the price down, he waited for a swing failure, and then he just massively market sold. And how much is that volume of that 1 minute candle? 2.6 million sell. So a whale sold 2.6 million volume in this 5 minute candle, and look at that. This guy made a shit ton of money. 2 million. Let's say his average price is there to the current price. The price dropped 10%. So this guy just made, potentially if he cashed out, he just made 200 grand just with that one fat finger sell. So volume is really important. You can chase volume, and obviously in the context of a correction, take your profit very quickly. If it's a swing failure, it's the best. If you get like crazy volume like that, then you're trying to catch the pullback. In the context of like these 1 minute time frame candles, which I look at a lot, look, this is the price action. Big sell, 1.5 million in 1 minute. The price came all the way back to fill the candle's gap, but the top of the candle held. The next candle, you had a swing failure, increasing high volume rejection for 482. So basically, someone sold, and then they just put their big limit order right at the top there, and the price tried to get up as much as possible until it finally got to the highest price, and then it just dropped right back down. This whole thing was pretty bearish, and it looks quite bullish in a sense. You like thinking, so look at it, it's quite bullish. It's quite bullish. It's quite bullish. How do you know? How do you know that this is bearish? Well, it's not different. It's not easier. It's not if the price started going up, that person who sold, it's probably a big short, could have brought the price back up quite easily. The key is that candle, actually. The key is that candle. So at the moment, that one single candle with high volume, the whole candle is holding the price, right? So basically everything is an inside range. There's a range inside that high volume candle, right? Eventually what you see is the price is just, because it's quite an explosive sell, all of a sudden you've created this wave where the price becomes really volatile. The reason why it becomes so volatile is because this one sell has cleared all of the buy liquidity. All of the buy liquidity in this range is cleared, and all of the sell side liquidity is cleared. So any buying and selling here moves the price quite a distance, just because of that one candle. Yeah, small amounts of volume can now push the price around large distances. Like from this low to there is only 200k, but you see the 200k, the price moved 2.5%. You know, so it's quite big swings, and because the swings are quite big, people who are buying and selling here take their profit quite quickly, and so you get quite big swings. But effectively what's happening is the price is within that range of that single candle that had most of the volume, and in the context of that range you're making lower highs, so that's bearish. Okay, and what else is bearish is that you had some nice selling tails there. That's quite bearish, and then when the price came right back up, it couldn't get past that area that those tails held. And so here you're not getting any more selling tails. It just couldn't get, market buying stopped effectively. It was basically no one was looking to buy into those tails. And the other thing that was a confirmation is that this midpoint of this high volume candle eventually also became your SR flip. This point between the candle body and the candle wick, just that one single candle controlled the price. And so here you see where you lose the neckline, you have one final back test, you have a rejection pattern, and then the price sold off, and then you see the price comes all the way back into the same place, into the same neckline, and then again you have failure. The structure here failed, to be honest with you. So you see this, that's a fail, that's like a really bearish structure where you lose the neckline. And so once you see that, people sold. Once you see that into a resistance area after a big volume, I think a lot, you know, like the whole story is looking bearish. No one knows what's going to happen, but obviously with Slerf, it goes mental. Slerf goes crazy. Anyway, that's just kind of like a lowdown on what I'm thinking when it comes to the next move. I'm not in any positions right now. I'm literally not interested until I see something that I really think could make me a shitload of money. And in my mind, I'm waiting for Slerf to bottom out. That's what I'm thinking. We're waiting for Slerf to bottom out here. And I want to see if Slerf bottoms out here, or if it goes lower. And as you can see also, the other thing, just bear in mind, we are underneath this kind of neckline here. This is at the moment, this is a head and shoulders pattern. We haven't taken out this low. That's why I want a swing failure, because if I don't see a swing failure here, then guess what the next candle is going to be? It's going to be a big red candle all the way down to here. You don't get a swing failure here. We're going all the way down to this next high volume node. That's what this will look like. If you suddenly get that, guess what's happening next? People will sell, and they'll try and push the price down as much as possible. They'll sell. And it'd be interesting to see what happens in this area if we get that kind of price action. Okay, so if we don't get a swing failure here, we're going down. Just because there's a bit of a gap here, right? So so we're bullish. So just I'm not expecting it, but I mean, who cares? If you don't get a swing failure, it's going down. If you get a swing failure, you can take the swing. I think it's more likely than not we'll get a swing failure, just because there is a little bit of an order block here that hasn't been cleared of liquidity. There should be a little bit of liquidity here, but I don't know. I mean, if someone is sitting on a large amount of Slerf and they sell because for whatever reason they bought down here, they're up 26%. They see that the price action is, as far as they're concerned, bearish. They might sell. Why not? And so you could see that happen. Okay, I'm not saying it's going to happen, but I'm waiting for my validation for entering along, and then when that happens, I'm gonna start push it. I'm gonna push it and try my best. But this time I'm gonna be a little bit more patient because I'm usually early. I'm dare I say it, I'm sometimes right, but I'm usually early, and what that always hurts me because when I was shorting these highs, I was early because I shorted the first high, got stopped out, and then here I was early, but because I got stopped out again, and actually I was right because the price was coming down, and so I really messed up the execution in the shorting. But it doesn't matter. It'll work out. Don't worry. I'll catch the next one. And I'm on the same mind as Dan actually. The only reason why I'm interested in other tokens is just to buy more TRVL. All right. I haven't really interacted with the audience today. Sorry, David's been doing an amazing job in chatting, so I definitely recommend listening to him. So MS Change, I haven't really talked about MS Change recently, but in a gist, I think there was a question about it earlier. I probably can't find it now. I don't know who is it. It says something about MS Change. Mohammed, dear Hamster, who's talking about Bitcoin? I think. On Slerf now. Well, I'm on MS Change. I'm looking at market structure on the 5-minute time frame. Lower high. I'm guessing that's the lower high. Probably not actually. I'll do it from the top because it's easier. It's easier to do it to go up than to go down. So obviously higher low, higher high. Lower low, lower high. Lower low. That's it. Right now we're just unless we put in a lower low, which I don't think we have. Nope. That's why Slerf is so good, because the range is so freaking wide from a lower low, higher low to a lower low. It's like a 10% range. See that? 8%. And effectively we haven't put in a higher high here yet, because we've gone from a lower high to a lower low. Where's the next lower low? We haven't had it yet. See, there's no lower low, so there's no lower high. So therefore, at the moment on MS Change, we need to make a higher high at 3757. So we're still in bearish market structure. I do see that we're forming some kind of bearish consolidation here as well. It's looking very flaggy at the moment. So again, with Slerf, I'm not looking to buy until I see my validation, and I fluffed my shorts. I had one really good short this week, but I got it late. So I'm not really interested in shorting down here into high volume nodes, even though the only thing you can really do here is scalp. That's probably the only thing that you can really do with Slerf right now. You just see where the range is and try and put orders at the top and sell the bottom. See, the point of control here is in the highs. It's pretty bearish, so you could probably sell this. Could probably short this actually. Hasn't hit the golden pocket yet, but it's not come into that wick. Again, I think it's a scalp. I think everything right now is a scalp. Because we've moved so much already, even though it's possible that we go down lower. If you have it in your mind that we go down lower, then this is probably the right place, or the right place to sell, because you have an invalidation. Or just sell the next swing failure. Just wait for the next swing failure. I think I would have liked to have seen the price go into the golden pocket here. It's kind of been front run. And you get lots of the good thing about the Slerf 1 minute, you get like lots of patterns. Maybe we're forming another diamond here. You get lots of little patterns which are nice because once you see them form, you could trade them. You could definitely trade them. This is the 1 minute. See, there was a pattern yesterday. Any questions on that? That was a 5 minute. Okay. So what next? Well, I haven't had lunch. I wouldn't mind doing some more analysis because, oh, I didn't explain it. Well, let me explain MS change on Bitcoin. I think I've explained it in the past, haven't I? So effectively, that's pretty bearish. High volume. Look at that selling tail. Oof, that's pretty bearish. Now, Bitcoin's just suddenly become bearish. Went from bullish to bearish. Let me have a look at that. We've gone above the liquidation bubble and had another rejection and a second rejection. So CVD is at the same height, price is lower. That's been sold into. Literally, we've gone from locally, we've gone from bullish to bearish. Look at that, longs. These longs are trapped. 6.8 increasing volume. Where are we? Oh, we've just lost the VWAP, or we're about to lose the VWAP. So again, it was bullish earlier, and now all of a sudden we're under the VWAP, but it's becoming bearish. That's what happens in crypto. It changes very quickly. All right, so market structure, just effectively when it comes to market structure, and I won't use Bitcoin actually, I'll just use a completely different chart. I just want a blank chart, just a random chart. There's no such thing as a random chart. Actually, someone asked me to analyze a chart. But I mean, maybe Bitcoin's the best one because everyone's familiar with Bitcoin and everyone's interested in Bitcoin. So well, let me just use an empty chart. I'll just use the index. And so when it comes to market structure, what you want to do is every time frame has its own structure. And so when you do market structure on a certain time frame, it's only applicable to that time frame. But so what the situation is this: so you have different time frames, and every time frame has its market structure, and you're effectively what you're looking for are higher highs and higher lows, and you're looking at pivots really. And so this is the 3-day time frame. Then you've got the weekly time frame and the monthly time frame, and every time frame has its own market structure. So starting on Bitcoin, if you look at the index going all the way back to Bitcoin historic price action, what you're looking for are higher highs and higher lows, and it's from pivot high to pivot low to pivot high to pivot low to pivot high to pivot low. And so every time you get a higher high, that's your new pivot, and then the next low, as long as you don't make a lower low, is your next pivot. Okay, so in effect, Bitcoin has been bullish on the higher time frame since the beginning. It's never been bearish, and from the beginning you have your higher high, that's your first pivot. This is the monthly time frame, and then you put in a higher low here, but what happens is you don't know that that's your higher low yet. And the only way that you know that that's your higher low is when the price takes out the higher high, the higher high. So the price action takes out the high. So you end up with a higher high, a new higher high. And so when you get the new higher high, when the new higher high is activated, it's printed, it's happened, then this low becomes your higher low. So your higher low is only confirmed after you put in a higher high. Okay, so this becomes your higher high, And so again, it's the same idea. This is you right now when you're looking at it up to, let me just put a vertical line so you can see up to this point, up to this blue line. Ignore the shit on the right, just focus on the shit on the left. I mean, I say shit, I mean candles. Candles. You've got your higher high, you've got your higher low. The higher low is confirmed with a new higher high. And if you want, you can, people use different kinds of things to indicate them. They use arrows, or I've seen people use arrows, or you can type, or that's why you have these emojis here. If you want to, you can get one of these emojis and you can just put a little hand if you want to. Or if you want to, you can put an arrow. Look, what's this stuff? All the way down at the bottom. Obviously, I don't do this. These are good ones. That will help to start with. If you're trying to map out highs and lows, you could do that. You could put one for the higher low. Obviously, every time frame has its own kind of higher low, lower high, etc. But let me just do it like this, and it might give you an idea about your own kind of analysis. Everyone has their own kind of personal preferences as to how they do things. So I've got one like that, got one like that. So instead of doing these shitty squiggles now, I can now start doing these. See that? So up to that point, up to the blue line, so just ignore the rest. You've put in a higher high, higher low is confirmed when the price takes out this high. So take it out. Oh God, what happened? Oh yeah, I can't back do for some reason. Then the next high becomes your higher high. See that? As time passes, you're trying to put in a higher low. It's not confirmed yet. It only becomes confirmed as you put in a higher high. See, as you put in a higher high, as you take out that high, your next higher high is the new one. And this, once you put in a new higher high, this low becomes your higher low. See that? And so this idea basically continues. You put in a higher high, and as time passes, the only thing that mustn't happen is the price mustn't come below the higher low. So the minute you put in a higher low, as long as the price doesn't come underneath that line, then you're potentially putting in a higher low. And you don't know that you've put in a higher low until you take out the high. That's the thing. So it's quite a lagging, indicator, but it does help with your overall bias. And that's why you have to do market structure analysis on the main time frames that you're using, all the way down to the lowest time. So I go all the way down to the 5 minute. I basically look at the daily, the weekly, the daily, the 4 hour, and 5 minutes basically. And then I'll look at the other ones as well, but those are the ones that I usually keep a track of. And just look into the whole of BTC. Once you put in a higher high, take out that high, so as soon as you take out the high, this low, this higher low becomes your higher low there. And now we're looking for a higher high. Once the pivot is put in, you can see there's a little pivot put in there as the price descends. Oh God, what happened again? We just, I don't know. Again, you could use the same idea. Trying to put in a low, higher low. As long as you don't come down below this low, that's a higher low. The higher low can come anywhere as long as you don't take out that low. As soon as you take out that low, you've put in a lower low. But in this context, you see there's no higher, there's no low low. Now, this is interesting because the price action, the price goes up. doesn't take out this high, and then it comes down and it doesn't take out the low. Okay, is this high a lower high? Is that low a higher low? And the answer is no. It doesn't become a higher low if you haven't put in a higher high. Yeah, here we haven't put in a higher low, higher high, so it's not a higher low, and it's not a higher low. Sorry, it's not a lower high because we haven't put in a lower low. Yeah, so if we put in a pivot high here, it only becomes a lower high if the price comes down and takes out this low. So you only know the previous pivot once the current price action tells you what's happening. So if the price down here came down and took out that low, then that would become your and actually it wouldn't become anything yet because you haven't had confirmation. So that's something else to bear in mind. So you effectively, what you need to do to change market structure is first put in a lower low here. So you need the price to go down and put in a lower low, and only after you put in a lower low can you then put in a lower high. Yeah, because then you confirm it with a lower low. So there's a little bit of a process to changing market structure. I just want to show you how you calculate market structure. And then here, because these didn't put in a lower low, this is nothing. These are just nothing. These two pivots are nothing. Just ignore them. These are the main pivots. As soon as you take out that higher high, guess what? You've got a brand new higher high here. And then this is quite interesting. What's about to happen now is quite interesting. So you go from a higher high to a higher low. That's a higher low. Why is that a higher low? Because we put in a higher high here. Okay. So if you look at the overall time, let's get rid of that now. Look at the overall market. You see the higher highs. You see the higher lows, right? Now this is interesting. So this is what happens here. Look. After we put in the higher high, guess what happens? You take out that low. Yeah. So now you've gone from a higher high to a lower low, all the way down. Not here, not this pivot here, because you don't take out the low here. This isn't your lower high. This is not your lower high because you didn't put in a lower low. Okay. It goes straight from the higher high all the way down to a lower low. Now this is not a change of market structure. This is the beginning of a change. So after you have a confirmed bullish market structure, so up to this point, we have confirmed bullish market structure up to that point. As soon as you take out this low, you've just initiated the first step to changing market structure from bullish on a higher time frame, on the monthly time frame, to bearish. The first step would be to take out the higher low, which is what happens in this candle here. And eventually the price will go down and it will put in a bottom, and that will be your lower low. Eventually, once you put in a take out the higher low, you're going to put in a lower low. Okay. And to confirm change, to confirm change, you have to go up, put in a lower high, potentially, but that lower high is only confirmed if, when the price continues, it goes down to take out the lower low in the initiation of the change. Yeah, so you need a lower high confirmed with a lower low. You need a lower low, lower high, and then a low low. So you're basically swinging from pivot to pivot, from the low to the high, to the low to the high. And as you're swinging, as long as you're putting in higher lows and higher highs, you're bullish. If you take out the higher low, then the confirmation would be to go back down and to take out the lower low that you've just put in. So if the price would have gone back down to 15K, then we would have been in a confirmed bearish market. That would have been a bearish market structure change on the monthly time. It would have been really bearish for Bitcoin to go up to 30k and then drop all the way back down to 15k. If that would have happened, then we would have been in a bearish downtrend like this. That's what you would have been seeing. Yeah. But it didn't happen. And so what happened in lieu of that was that you put in a lower low here, and then in one move, effectively one move, the price has gone up to take out the high. Okay, so now that you've taken out the high, what's happening to the price action here? I'll explain. So effectively, if I get my emoji so you can see it. Effectively, you put in a lower low and you've gone and put in a higher high. So when that happens, this higher low is no longer your higher low. You can kind of scrap it. And now what you're looking at, and that higher high is scrapped too. So they're nothing. So those two are scrapped. And now this is what you're looking at. You're looking at the higher highs at those triangle emojis and the higher lows of those triangle emojis. So you basically, all you've ended up doing is deleting two marks because you have a new higher low. It's not up there. That wasn't your higher low. This was your higher low. This is the real higher low. And that wasn't the higher high. This is the real higher high because you've confirmed it, because you've gone from a pivot low all the way down here, all the way to a pivot high, all the way to a pivot low. And now we're making highs. So that's, if that high gets taken out, obviously we don't know if that's a pivot yet, but right now we are making highs. Yeah, so when this could continue. Okay, so that's basically Bitcoin's monthly bullish market, bullish I say, market structure, but it's bullish obviously. And so it's kind of like this. It goes from pivot to pivot. That's kind of how Bitcoin has moved. And now we're kind of pushing up to put it, we're looking for a higher high. That's what we're looking for right now. We've just put in a higher high, but you know, we're potentially still looking for the pivot to be put in. The only way you'll know, and this is the thing, it's quite lagging, like in this, on this time frame it's lagging. If you put in a pivot up there, and then the only way you know that that's your pivot is if you go down, you end up putting a higher low somewhere, and then going back up and taking out that pivot. Once you take out that pivot is confirmed as the higher high, and then also you have your higher low. And so eventually, like, and it's the same thing happened here. Was that your higher high? Well, no, it wasn't, because actually that was your higher high, because the price still went down to take out that high, and actually it went back down to put in a higher low here. And so it's quite a delayed analysis, but it does give you confidence about the direction of travel. And that's what people really use structure for, is to know which direction the price is moving. So that's the monthly time frame. So usually what I will do is I'll be looking at the 4 hour and the 5 minute. So if I go to the current Bitcoin chart on Bybit, let me just, have I hidden everything? No, I haven't. Just hide things. I'll show you. So on the 5 minute time frame, it's the same idea, it's just much quicker. So but it's the same idea in the sense that you're going from high to low, you're going from pivot to pivot. It's with the 5 minute time frame, it's always best to start a bit further back. Yeah, so here we are obviously in the highs, you can see that, and let's just start here when the price is going up. So you take out that high. So let me just mark it out. I'm not gonna, shall I bother with emojis? Maybe I should, but if I'm going to use emojis, all right, I'll just use emojis. I can just copy in. That's fine. It's fine. I'll just use emoji. Oh, I want to clutter my charts, but it's fine. I'll delete them. I'll use emojis. So you see here, that was the low. and take out these highs. So you've put in a higher high there, you've put in a higher low there, you've gone up to put in a higher high there. That's your higher low. That's your higher high. Okay, now this is interesting. So this is, look what happens here. So you've put in a high high, high low, high high, just taking out the low here. Okay. So that's your initiation. That's your first step to changing market structure, to put in a lower low. Okay. But it's not confirmed. Confirmation here would be to go up and then go right back down and take out that low. So you always have the first step, which is a new lower low or a new higher high. Yeah. But that doesn't confirm the change. To confirm to change, you have to complete the pattern. The pattern is, and as soon as you put in a lower low, you have to put in, potentially you have to put in a lower high. And confirmation is really important. It's only confirmed if you can take out that low, the current lower low. If you can't take it out, then this is not your lower high. It's only a lower high if you take out the lower low. If you take out the lower low, this becomes your lower high, because if you see it goes from a higher high down to a lower low to the next high, which is potentially a lower high. Now it could be any one of these as long as the next move is to the low. Okay, so it could be, depending on where the pivot comes, for the next move to go down and take out this low. Okay, so if that doesn't happen, there's no lower high, because you haven't taken out the lower low. And so you're just looking to see where the next lower high could be. But the price, anyway you put in the next pivot, the price still has to go down and take out this lower low. Now what happens here is that the price goes up and it puts in a higher high. Because the price puts in a higher high there, this initiation is invalidated. There's no bearish initiation if you go from a lower low straight to a higher high. So this becomes, this is still your lower low, but what it means is that these 2 points, these initial points, this first high high and this first high low, you can delete. What effectively happened is that you went from a higher low here to a higher high there, and this is, these two pivots aren't part of those, that aren't the end points. This is the start point, that's the end point. Then it went to a, so effectively instead of going up like this, effectively what's happened is that you can ignore this and it's actually going up like this. See that? To the next pivot high. Okay. And again, it's the same idea. You just don't want to take out this low now. It's quite far away. But the minute, what happens here is interesting. So what happening here is that you go and put in a higher low. Now we don't know which one of these higher lows are the ones. Okay, which one is the higher low? Until you take out the higher high. So here you see you've taken out the higher high. Got a problem with my charts, sorry. Literally trading view. Have I lost it? No. See, you take out that high. No, which high was it? Sorry. Take out that high, that's the higher high. Okay. So you have your higher low, you have your higher high. Where's the higher low next? Well, same idea. You just don't want to take out this higher low here. So as long as the price doesn't, from that higher high, as long as the price doesn't come down to there, then you're still in higher low territory. It so happens that just before we put in a new high, we put in a higher low here. Yeah, so none of these are higher lows. It's this one before we put in a new high. The one The pivot that's put in before it goes all the way to a new high. Yeah, none of these pivots here took us to a new high. None of them did. Here, none of them took it. But this one, higher low, goes all the way, takes out that high. Oh, actually, my bad. So what's interesting here is that, okay. You go down. Okay, let me explain. So we put in a higher high here. Now we're trying to put in a higher low. And the confirmation is taking out that high. So here you see that the pivot was taken out. So that's a higher high there, actually. So that's why I was saying it was lagging. So now that that's your higher high, which one is your higher low? Well, the higher low is the low that was put in before you go up to put in a higher high. Not the highest low, but the one that follows the higher high. Yeah. You don't just put the highest low. You've got to put the lowest low, but it's the highest low after you've put in the pivot. So it's the lowest, it's the higher low compared to this point, but actually it's the lowest point after you put in this pivot, and then you go and take out that pivot. I don't know if that made sense, but effectively you're not going to the highest low in this range, you're going to the lowest low in this range, but it's still a higher low compared to the previous pivots. So it's pivot to pivot. And so effectively, after you've put in a higher high here, you want to go down and put in a higher low, but it's only a higher low with respect to this pivot. It's still the lowest low. Does that make sense? It's still the lowest low because you're going from the highs to the lows. You're not going from the highs to the intermediary lows. You're going to highs to the lowest lows. So you go from the high to the low. Then you put out, Tom is asking, does it not matter how the high is taken? Sometimes it's not. It really doesn't matter as long as the price action goes above the high. And I think for BTC, you should use this chart, BTC USD perpetual contracts, because you're going to get correct wicks, correct price action. In some exchanges, you might get scam wicks where the wick goes above a level, but it's not correct. Okay, it just shows illiquid nature of the market when you get scam wicks. Yeah, Bitcoin on Bybit inverse perpetuals, you're not going to get that because it's highly liquid. It's highly liquid, and that's why you're not going to get that. So you go and take out the high. That's your higher high. Once you have that higher high, you can put in your higher low. It's here from the high to the low to the high. Now this is interesting. So here what happens is that, see that low is taken out. That's your first, in this context, that's your lower low. There's no confirmation here, okay, until you put in a lower high and take out the lower low there. So actually here we had we had market structure change, yeah, and then it went and put in a higher high. So it really screwed everyone effectively. This whole price action screwed everyone because here you had a confirmation of the change. That's your lower high. Why is that lower high? Because you've just put in a lower low. So this idea changes, lower low and then lower low. So two lower lows and then intermediate. It's joined by a lower high like that. So now that's your lower high. But actually what just happens is you go straight from bearish, this is bearish, to taking out that high. So this doesn't happen often, but it can happen. It can happen in sideways price action. And so here you can see you take out the high and you've gone in and put in a higher high there. Higher low there. You've taken out the high just by a pip. You've taken out the low here. Lower high there, lower low. So it's really interesting, but what happened was you confirmed the bearish here, which took out the high and created bullish here, only to change again. All right, so there's a lot of it wasn't easy, because here you're bullish and then you have to flip back to bearish again, just by, and this is a little bit of a trap, to be honest with you. So I don't know if I've shown you the right example. I just picked on it. Once you have your bearish market structure here, what you see is that that continues. So it's the same idea. Go from the lower highs, lower lows, lower highs, lower lows, and then what happens here, we take out the high, but we don't take out the low, so it's still bearish because you haven't had the confirmation yet. Even though you've taken out the high, you need to go and take out the low now. So this is the low, higher, high, and effectively what happens here is you put in 3 higher highs but no lower low, so you're still bearish here. Even though you put in higher highs, you're still bearish, okay, because you're still putting a lower low. You haven't taken out the lower low yet. Wait, did I do that right? No, I did that wrong. Sorry, my bad. Let me just correct myself. Lower low. No, so this becomes bullish again. My bad. Again, it's the same thing. It's quite it's not easy. Yeah, so sorry, my bad. So you go from a higher low all the way to a higher high. That's the first step. Higher low here, another higher high, another higher low, another higher high, and then you have another change here. Okay, and so obviously it's quite difficult because you're getting the change, but there's no real continuation. But that's because you're in sideways price action. Yeah, so that's the thing. When it's trending, it's really nice. And so here you see what happens is the price goes down, takes out that low, puts in a higher low, a lower low here, puts in a higher, lower high here, and then the confirmation is to take out that low. And so now that's your lower low because you've taken out this lower low here. This becomes your lower high. So it's crazy because this is now bearish. And so you see what happens? It goes from right market structure is bearish and it goes up and takes out the high. And so that's why you have to do it on multiple time frames, because that gives you context. And so what I'm doing on the 5-minute time frame, that's going to help you with an entry, but only if you're looking for higher time frame market structure to change to. And so that's the other thing to bear in mind. So let's just look at the current price action of Bitcoin, and it's quite volatile, though, isn't it? It's quite volatile. So this is the obviously this is some kind of lower low here. This is some kind of lower high here. So we've gone from a higher high to a lower high. Wait, let me figure this out. Yeah, so look, there's been a change here. And so let me just mark it out. So this is your higher high. This is your lower low. This is your lower high. Take out the low. This becomes your lower low. Right? Now your high to get to is there. That would put a higher high in. But it doesn't get there. Okay? It doesn't get there. And so here is quite a wide range. And effectively in the current range, you take out this low up to here. You've put in a lower low right up to there. That's a lower low. And then you have to look back and see where the high is. Where's the high? Well, it's here, isn't it? Because the previous high was there. So this is your lower high. Take the highest one. This one. lower low, but guess what? It's on the 5-minute time frame. Not only are you putting lower lows, you're now putting lower highs because you're taking out the lows for a lower low. Yeah, to put in a lower high, to take out the low, to put in a lower high. This is the best one. This is the best trend. When you see this, this is really nice because you can see a trend and you can see that the lows are being taken. You're getting lower highs, lower lows, lower highs, lower lows. You can see the market structure is bearish, but it also helps you to see a change, because as soon as you're trending like this, you put in lower highs, lower lows, lower highs, lower lows. And the only way you know it's a low high is if you take out the price action from the low. So yeah, that does. Lower low, lower high. Now this is interesting. You see here, the price, you've got a lower high, but it actually goes in and puts in a higher high here. Okay. It goes up by a pip or two. But after putting in a higher high, it takes out the low straight away, all the way down to there. Effectively, what happens then is that this lower high is no longer your lower high. This is your lower high. You just ignore that. And this lower low is not your lower low. It's basically from here. It's from here to here. This, you can ignore this lower low. It's basically from there to there to there, to a new lower low, to a new lower high. Why is it a new lower high? Because you make another low. So as soon as you make another low, you can calculate your lower highs. It's basically the highest high between the previous lower high to the current low high. Okay. All the way down to a lower low. It's a lower low. This is nothing. This is not a lower high or higher low. This is nothing because it doesn't take out the pivot of interest, which is here. Okay. And now as the price goes up from the lower low, it goes out and it takes out the high. Now the question here is this a higher high here and a lower low here and a higher high? That's I struggle with this question too, because sometimes I think no and sometimes I think yes. In this context, I think it was here, but I think we had a fake out here. Okay, so in this context, I think you had a higher high here, a little lower low here. As soon as the price took out this higher high, it was here, then it was a lower higher low here, then the price went up, put in a higher high here, higher low here. See, it took out the high there, so that's your higher high. Then it went down from the higher high to put in a higher low here, because every time you're putting in higher highs, higher low here, higher high here. Now here you see what happened. Took out that low, so this is a low low, this is a low high, took out that low. So we're now in bearish, low low, lower high. Really tiny trend. Goes, puts in a higher high, higher low. Where's the higher low? Well, it's not here because that's the lower high. It's only when you take out that high that it becomes a higher low. And there it is, because that's when you take it out. And so now your higher high, as long as you don't come down to here, it's a higher low. Confirmation is when you take out the high, that's the high. So here it's interesting too, it does the same thing. So you got to be careful, because you'll get a change, but then you'll get a fake out. So this does it too here. You put in a higher high, that becomes your higher low. It takes out the low, but then it goes up because there's no confirmation. You need confirmation. Confirmation would be to go up and then go back down. Yeah, so the initiation is not enough. Yeah, it's speculative. When you get an initiation, it's very speculative. When you take the trade, it's only confirmation when you have a increased probability, increased chance of the trade, of the structure being correct, and then trading with the structure, with the trend. And so the structure gives you the trends. And so I'm just doing on the you can see it changes a lot on the 5 minute. That's the higher low. That's the higher high, higher low. You see here it held. See, higher low held because you put in a higher high, higher low, put in a new higher high up here. Put in another higher. So your higher low is here. Look, that's your higher low. That's your higher high. It's really tight range here. And you get a change very quickly up in these highs because you've just put in a higher low here, higher high there. And as soon as you take out that low here, this one, that becomes your higher lower low. Now, this is interesting. This becomes your lower high. This becomes your lower low. Now, what the price does, so we're in bearish now. So there's a change. You can see there was a change here in these highs because you took out this low with a lower low. You took out the, you put in a lower high and then you took out the lower low to put in a new lower low. So the change was the initiation, lower high, and a lower low confirmation. Okay. So once you have that, what happens here is the price goes up, takes out that higher high, takes out that lower high here, but you don't have confirmation. And what it does, it goes straight from a higher high to a higher lower low to a lower low. And effectively what happens is this lower high is nothing, this lower low is nothing. So it's quite lagging in that respect. And in effect, the structure here is like this. So it's developing, isn't it? It's developing. And in effect, the structure is from this low to that high, to this low, to this high. That's the structure. And then as you take out the low here, you have confirmation. And then it just continues. It just continues. And so that's where we are now. Let me just take it all the way to the current price action. So you see we have a lower low here, lower high, lower low, lower high, lower low, lower high, lower low. That's the high to beat. So we're still bearish. That's your high. And why is that the high? Why are none of these like lower highs the high to beat? Because that's the highest high before we put in a lower low in between the two lower lows. So you have a lower low here, that's a lower low, and that's the highest high. So when you say lower high, it's only a lower high in the context of this high. That's a lower high, but you don't want to take the lowest high. You want to take the highest high. So between the two pivots, between the two lows, so these are your two lows, right? What you want to do is you want to find the highest high to be your lower high. If you're not sure, just pick the highest one, but it has to be in between the two lower lows, and it has to be lower than the previous higher lower high. That's what it is. It's a lower high compared to previous. And so you can kind of, without really kind of going into too much time consuming depth, because it does take a little bit of time, an easy way to see it without really kind of going into too much depth is to just draw the outline of the price action. You see here, we're kind of putting in lower highs, yeah, and you see here we're kind of putting in lower lows. You see that? So we kind of at this stage now. This is the rest of what's happening here is just the market trying to figure out what it's doing. But at the moment, these are the two outer lines, and that's your lower high. This is your lower low. This is your lower low. That's kind of where we're at. And then anything in between is just noise, effectively. There's no kind of trend. It's just ranging until it figures out what it wants to do, whether it's going to take out that high or whether it's going to take out that low. Taking out the low would be more bearish because it's a continuation. If you take out the high, it would be the first step, the initiation into changing market structure. So in the current context, if you go up, take out that high, that would be a higher high, because this is your lower high, but you still need confirmation. As long as you don't go back down to the lower low that's here, as long as you don't go back down and take out that low, you can anywhere up to that point, the price can put in a higher low somewhere. And as long as the price has the capability of taking out the current higher high that is put in, then that would be a confirmation of change. That's what you're looking for in change. Okay, so you're looking for, after you have bearish market structure, you'll be looking for a new higher high, a new higher low, and a new higher high, in that order. And for bullish to bearish change, it's literally the opposite. You're looking for a lower low, a lower high, and then a lower low. Yeah, so I've already explained it, but I'll just go right back in history and find another example. Maybe somewhere, maybe here is quite good. Yeah, so I'm just here, look, you see, higher low goes all the way up. There's your pivot right there, higher high, higher low. Just before that candle takes out the high, you put in a little pivot, higher high. That's bullish. So now you're looking for a higher low. Oh, look what's happened. You've just put in a lower low. So you've just literally taken out the low. So this is your lower low. Okay. Now, as soon as you put in a lower low here, look what happens to the price. Look where the change happens. Look in the structure. Look how the price floats. Right now we're in bullish, but we've just initiated the change to bearish. Why? Because that was a higher low. Then we put in a higher high, and immediately we went down to put a lower low. This is a lower low. Okay, so that's a lower low. That was a higher high. Okay, so as long as we're still bullish, but for the bullish market structure to continue in this context, the price needs to go up and it needs to make a higher high there. Okay, if the price is able to go up and do that and put in a higher high, then this lower low will then become your higher low. This suddenly changes from a lower low to a higher low, because you've gone from this low straight to a high, and so therefore the market structure continues, because you're going from higher low to higher low. As the condition here is for the price to go up and take out the higher high, but because we've put in a lower low here, and because that hasn't happened and we haven't been able to take out the high, what happens is that as the price comes down underneath this low pivot, this lower low here, you see that red candle? As soon as the red candle breaks that level, that's a confirmation of change. Why? Because you've put in a lower low and you've confirmed it with a new lower low without taking out the high. Okay, and all you have to really do is just look at this range and just find the highest high between these two pivots, between these 2 points, this lower low here and the place where the price took the low. And so if I just trace it back, it's always good to trace it back from where you make the new low. So where you make the new low here, trace it back and just find the highest high. So it's basically that. See that? So effectively, the price went from a lower low here, it went all the way up to put in a lower high here, to put in a brand new lower low here. You see that? That's how the price actually moved. Forget about the rest. It's all just kind of waves and noise and stuff. You're really looking at the pivots when you're trying to calculate, and it requires you to calculate, doesn't it? There's a little bit of calculation involved. And then here you can see lower low. As long as you don't take out that lower high there, that's your target. That's what the bulls would need to do to make this, begin trying to make this bullish again. You're basically low low. It's just non-stop, isn't it? It's just, look. It puts in a lower high here, but it puts in a lower low here, takes out the high. Technically that's a higher high, but then it goes and puts in a lower low. So effectively what's happened, that was a little bit of a So effectively, that's not your real pivot. That's your lower high, because from that lower high, you go in and you take out the low again. So you're effectively going from there to there to there. Okay. And each time you're putting in lower highs now. So lower high, lower low, lower high, lower low. As long as you keep on making lower highs, as long as you keep on making lower lows, the lower highs will follow. So low high, low low, low high, lower low. Now this is interesting. So you've put in a lower low here. That's your high to beat. And you go from a lower low here. Take out that high. That's your higher high. So that's your initiation. And once you've initiated the change, you just have to put in a higher low. So don't take out this low. So you go from up there all the way down to here. And as long as you take out that high, which high is it actually? It's not that high, it's this one. So my bad. It's this one. Is it? No. All right. Sorry. So you got to be very careful with these wicks. That's what I've learned. You go from the the lower low here to a higher high. But actually what happens here is you put in a higher low here and you take out that high. That's a change. But immediately what happens? And it just what it helps is it helps with your pivots. That's all. It helps with where to put stops. Okay, really and it helps with you finding the trend and trying to trade the trend, because you know with Bitcoin, look, we've just confirmed bullish only to take out the low. Take out the low, put in a pivot. So it went straight from bullish. Once you confirmed bullish, it immediately became bearish immediately. So this is trickier on the 5-minute time frame. You've got to be careful. It helps with the pivots where you could put stop orders, but you got to change here from bullish to bearish all the way down to put a low here. And then it just went back to put in a high. And then you put in a higher low here. There's the higher low. That's confirmation because you took out that high. So effectively here, you're putting a lower low, higher high, higher low, higher high. That's your change. And again, it's the same idea. As long as that pivot isn't taken. But it does, hasn't it? Bitcoin has been doing that. And it's really good when you're looking for, actually, I was way back, was I need to come here. What you're looking, market structure is really good when you're looking for a change. Yeah. And that's really why I use it more than anything else. So I'm looking for a change where after a downtrend. Yeah. So let me just have a look at Slerf, for example, because Slerf is in a bit of a downtrend right now. And I was looking at Slerf, wasn't I? And I will use the 5-minute time frame just because I want to see a quick change. But here I've marked it off. Lower low, lower high, lower low, lower high, lower low. So here right now in this context, what's the context? The context is some sort of downtrend. So obviously the first indication of a turn of trend is going to be a market structure change on this lower time frame. But you also need to keep an eye on the higher time frame ideas too. And so that's the other thing to bear in mind. So I've been looking at the 5-minute time frame now, and as you can see, it's not straightforward. It is a little bit complicated, but it's not that difficult. See, on a higher time frame as well, you have the same idea. And in my opinion, if you're looking for a trend, look for the 4-hour time frame. Okay. And obviously the higher time frame, the better. The daily or whatever is going to give you the highest time frame. But in terms of like trading on an intraday basis, the 4 hours, probably the intra-week basis, the 4 hours probably the best. And so in this context of Slerf, without really going into too much depth, you can see here we're putting in higher highs And you can see here, we're putting in higher lows. That's where we are now. See? So effectively, up to the high there, up to the low there, up to the high there, up to the low there, up to the high there, up to the low there, up to the high there. That's how the structure is right now on the 4-hour time frame. Higher highs, higher lows. This pivot here is the level to beat. If the price takes out this pivot, which it hasn't been able to do just yet, this is your higher low. Apologies. I didn't even see that. My bad. You see, that's why it's tricky. It's not, you have to keep on looking, because you can make a mistake. And there is I would have made a mistake had I not looked again. So what happened here is like this. I'll show you. And I don't know if you're following Slerf or not, but we're not. I wish I had my back undo. So to the high, to the low, to the high. That's your confirmation there. Taking out the high there was your confirmation. Yeah. Now we're in bullish 4-hour time frame market structure. Naturally, when you're in bullish market structure, what you're looking for next is a higher low. And we got that. We got that here. Went all the way down for a higher low here. See that? Then the price went up. Take out that high. You've put in a higher high there. It wants to go back down to put in a higher low. That's your higher low. The only way we know that's a higher low is because the price needs to go up and take out that high. As soon as the price goes up to take out that high there, that's your higher high. Now, this is the part that I kind of overlooked. Then the price goes down and puts in a higher low there. See that? It goes up, it puts in a higher high there. And here you have the initiation of the change. It takes out that price here, that level there. That's your lower low. It goes up, puts in a lower high. And then this is the confirmation of market structure change, because up to this point you had an initiation where you put in a lower low, but as long as you don't put in a second lower low, as long as this lower low isn't taken, the price can easily go up and take out that high, and bullish market structure continues. Okay, that didn't happen. Instead, what happened was it went up, it put in a pivot here yesterday, and it went down and it took out this low. So here is your change. We have a 4-hour market structure change on Slerf. This is bearish market structure change. Effectively, what it means is that if there's a change back to bullish, you'll see it. Really, that's what I use it for. So I mean, when it comes to trading, I prefer my areas of confluence and horizontal levels. But you know, you could now potentially, we've just changed to a bearish downtrend. People can do two things. They can either just trade the trend, sell the highs, buy the lows, and look for continuation. That's what people will do. As long as you keep on making lower highs and lower lows, then we could be on this could be the beginning of a pretty extended downtrend. No one knows. Okay. Or you're looking for change. And what I use market structure for is change. Yeah. And what I'm looking for, now that we've confirmed a bearish market structure, the minute it goes back to bullish, it becomes really bullish, in my opinion. Yeah. Because we've had bullish. Look how bullish was here. Bullish here was really bullish. Look how, like, it was crazy bullish, wasn't it? And so when did this bullish price action happen? Well, initially it happened after a market structure change here on the 4-hour time frame. So you go here, you put in your lower low here. Yeah, that's your lower high. Where is your lower high? Your lower high is here. That's your lower low. So here we're bearish, all the way up to here we're bearish. Okay, I won't draw it out, but I'm telling you, that's your lower high, this is your lower low. Then here, look what happens. The price goes up and takes out that high. This is your initiation of change. That's the higher high. Now you just have to take out this pivot without putting in a new low. The price goes down, doesn't take out this low, it goes all the way down, doesn't take out that low. So, and then it goes up and it takes out this high. That becomes your higher high. And then that's a confirmation of change. This is your new lower low. So it goes to from a higher high to a higher low. That becomes your new higher low. It's the lowest one in this range, but it's a higher low because it's higher than this pivot. And then you go up without taking out this low. You go up this low, you go up and you put in a new high. This is your market structure change up to there. And naturally, when you get a change, you've just literally changed from a bearish market structure on the 4-hour time frame to bullish. That's what you want, right? You want to enter, you want to buy, you want to accumulate, whatever, when there's a change. And the change, you see the next dip was bought, okay? Without taking out this low here. This is the low actually. That would be a lower low. No, it wouldn't. Sorry, my bad. This would be the low to beat. So without taking out this low on this pullback, yeah, because that's the higher low, that's the higher high. And then it goes up, it puts in a higher high. See, so that's what you want, looking for. You're looking for to buy the first pullback of the change. Okay, in the same context, we've just changed the bearish now. So technically, you're looking to sell the first pullback of the change. This change has just happened. We're coming into this resistance here. Now, because I'm expecting a wave, because we're in a correction, it's more like, this is the thing, in the context of a Bitcoin bull market, it's better to buy, but it's also better to buy at the right time. Why is it better to buy? Because everyone is buying, and this is something you have to understand, that most half and half spot they're not leveraging, shorting. People on spot usually accumulate. They're basically buying to accumulate, yeah. And so, and then most people are buying. We're in that mindset. So a lot of people find it hard to short. Main reason why people find it hard to short is because they don't know where to put their invalidations, yeah, or they don't understand how to do risk management. But that's fine. Most people are on spot or low leverage. It's easier for a lot of people to buy, and that actually the buying is the most impulsive, and the Bitcoin bull market is going to be the most impulsive, because all of a sudden every single person starts buying. So, and they can't get filled, so they actually end up buying at market, and it pushes the price up and it creates gaps in the market. Okay, and probably, in my opinion, I mean, I think we're having a bearish, this is a confirmation of bearish market structure now. So we're very clear about the pivot high, like the pivot high to beat right now. And I'm kind of annoyed myself because I had the most amazing short position, which got stopped out. So that's my fault. And it's basically my fault because I didn't have my validation above the high. That was really my idiocracy. But here, if you take out the low, bearish market structure continues. This becomes your lower high. Then we're forming a new low. But in the context of where we are now, the price would need to go above 42 cents to put in a new high. And then the price would have to go back down, put in a higher low somewhere, and then you need to take out that high. That would be a confirmation. But if you get that kind of price action, then this whole thing becomes bullish, really bullish. Yeah, and you'd want to catch that, because once you get a market structure change like that, then the whole market is putting in higher lows again. Right now we've just taken out these higher lows with lower lows, so we're in a little bit of a mini downtrend. But I mean, on the daily time frame, again, it's the whole idea is the same. You have to kind of look at the overall time frames to see what's happening. I tell you something, on the daily time frame, we're not bullish yet, and this, you may not realize, people may not realize that, but we're actually still bearish. And so you have lower highs. That was your higher high there. Lower lows to here. And so effectively what's happened on the daily time frame is we've taken out the lower high here with a higher high, but until the price is able to get above about 54.5 cents, this low has to hold. That's your basically your price range. If we now go down and put in a lower low here, this whole thing becomes extremely bearish. Yeah, this would be really bearish. Like, I wouldn't even buy. I mean, it'd be a good place to buy for a scalp or for a swing failure, maybe a bounce. But effectively, if the price was now to go down and take out that low, you've confirmed bearish. I mean, it's already in bearish market structure. You're just confirming bearish market, continuation of bearish market structure. If that was to happen, this whole structure would look really bearish, falling underneath some kind of neckline there. It would look really bearish. And so I'm not expecting that at all, but I'm just giving you an idea of what would make this look really bearish. And the fact of the matter is, on the daily time frame, we're still in bearish market structure, and we haven't changed that yet. So there's plenty of time that people are thinking about Slerf. They're feeling FOMO. You could even wait for the daily market structure to become bullish and start buying. Honestly, there's no real rush with Slerf. I think it's good to accumulate at the lows when it's cheaper, but as long as we're holding this low, then I'm good with the price going up on the higher time frame. But even if we get a daily market structure change, I don't know how this is going to be. Let's say we go up, take out that high, that would be your first confirmation. That would be bullish. You can still wait for the first higher low after you've confirmed change to buy, and then you have a definite invalidation, because if now we go up and take out that high, this low here becomes your higher low, and you're now in a higher time frame bullish market. That's really what you need market structure to do, is to tell you the higher time frames, the daily. 4 hour is good, and then on the 5 minute, it's really just for sniper entries. Yeah, so when you're looking for a sniper entry, yeah, like if you're feeling bullish, let's just say for the sake of my example, that the price on Slerf is going down like it is now, and you're feeling quite bullish, you want to buy, and you're looking for an opportunity to buy. Well, obviously you don't need to buy hoping for the price to hold. You can just wait for the 5 minute market structure to turn bullish. At least then buy when it's bullish, don't buy when it's bearish. And so that helps, doesn't it? Because the first thing that will need to happen, and it goes back to my point, like you have invalidations, you also have validations. So you could have a validation in your mind. It would be, well, I'm not going to start buying until I see a 5 minute market structure change to bullish. That's a validation. So you have invalidations, you have validations. You have another validation, could be, I'm not going to start buying until I start seeing higher lows. I'm not going to buy until I start seeing buy volume injection at the lows. Yeah, that's what you want to see. So I'm looking at the volume now. Yeah, I see this big buy volume in the highs. I don't like that, of this local range. I see bearish market structure. I'm not going to look to buy right now. It's not looking bullish right now. It's just looking like a consolidation range, waiting for the price to do something. But the fact of the matter is that 4 hour time frame has just confirmed bearish market structure. Yeah, and we're at a very important SR flip potentially here. Yeah, if that holds, I don't want to say this is going down, but it could go down. And again, you can just use that idea and on every time frame. So you may find it difficult on the 5 minute, you may prefer it on the 15 minute. You may find it difficult on 15 minute, you might prefer it on higher time frame. Just give you less kind of candles to deal with, so it might be easier to see the pivots. Yeah, it might be easier to see when you're trying to do it. It might be easier to see the pivots. So this is the 1 hour time frame, and it might also give you slightly different pivots too, just applicable to its own time frame. Okay, so I'm just making this up. I'm not 100. I'd have to go back and calculate. Let's just say that's the low there. That's the higher high, higher low, higher high, higher low, higher high, higher low. See, it's a little bit more. Why is that the high high? Because it took out that high. Why are these the higher lows? Because it was the higher low before we took out the current high, before we put in a low, before we took out the current high, put in a low before we took out the current high. See, all the way up to there. We don't take out that high until there, and so you end up with this really crazy expanded range because the lows and the highs are so far apart, yeah. When you get that, you get these kind of crazy ranges. Good to bottom. When you see that, it's good to bot. When you see the higher low and the higher high are very far apart, it's really good to bot, because you have quite volatile price action. And basically, effectively, what's happening is that the bears are trying to put in a lower low, the bulls are trying to put in a higher high. That's what's happening. Here you put in a higher high, higher low, higher high, same as the 4 hour really, and then you take out the low there, put in a lower high there, and then we just go all the way down to here. That's a lower low. Fail to take out that high. You see, none of this intermediary price action matters because you fail. That's a lower high because you take out this low here. Yeah. So even in the 1 hour time frame, we're looking at bearish market structure like that. Okay, and we haven't put in a lower. Yeah, we haven't put in a lower low yet, and because we haven't put in a lower low yet, it means that our lower high is all the way up there. So again, this is quite a big range. It becomes easier to change if we put in a lower low now. It will become much easier because it means our lower high is closer. All right, I've been talking for a lot, and I have to go. I think I've covered everything, and I haven't even eaten yet. So just might as well not trade. Look at it, it's just kind of going up and down, up and down. Look at it, the price range is just rubbish. So I don't think there's a trade on at the moment. I think the next trade potentially is just taking out these lows for a swing failure. Potentially. Yes. Well, I've been bearish for a while. All right, I'm gonna go, guys. Yeah, anytime. I'll probably cut it up into a video. I kind of probably made a few mistakes, but I tried to correct them because it's, you know, analysis requires a lot of focus. And I'll put it in a section on market structure. I'll probably do more in the future. I'll probably do better ones. All right, guys, thanks for joining me. I appreciate your time, and hopefully we can continue to look for the best entry for Slerf and other tokens. Yeah, I think we just keep on analyzing. We can find it. All right, have a good day, guys.